All right, I just emailed them to Jesse.
Nice. Nice. Hi. What's up? How's everyone doing? What's up, Aaron? How we doing? Good morning, good afternoon, good evening, wherever you are in the world. Hello. What's up, Happy? Happy Muhammad is in a bad mood today because his Flames are getting roasted. I don't blame you. That game last night was tough, although they made it close there at the end. There, they tied it up and almost won. But I don't know if you saw that goal last night. Did you see that goal last night?
Did
you see that goal
line.
last night? Oh, that was brutal. All right. Welcome to Benzinga Live, our midday show where we talk about the market, we talk about our wardrobe and sports and whatever the heck we feel like talking about. It is Wednesday. It is hump day. We're getting over the hump now. The question now is, are we getting under the hump in the bear market? That's the question, right? Are we bottoming? Oh, I'm going the wrong way. Are we bottoming, right? That's the question everybody wants to know. And nobody has the answer. Ironic, isn't it?
Yeah.
Nobody has the answer to that question. Have we bottomed? I don't know.
Time will tell.
Time will tell. It'll seem obvious in hindsight because it always does. But in the meantime, we do have some interesting price action today, Aaron. You made the title of today's show. Tech is bouncing because most everything is bouncing today. Is there a sector that is not in the green? I don't believe so. Last I checked, at least.
Yeah, and I mean, I was mostly watching tech this morning, and that's why the title is that. But obviously, you have energy leading today.
No, actually, it's discretionary, which is Amazon. Okay, the real estate is flat. Utilities are down. Everything else is looking up, though. So that's cool. That's always fun. You have a green day. That's the way it appears to be so far. Time will tell. We do have a potential market moving event coming up in a couple hours here. The release of the Fed minutes, Aaron. And I know you and I don't really care about this stuff, but like some people out there really do care about what the Fed talked about in their most recent meeting. We already know what came of it. But how was the debate in the meeting? Was it lively? Are there nuances to be found in the minutes? Well, that's what we'll find out when those are released at 2 p.m. today. That could move the market a little bit. What is a rainbow moving average? Have you ever heard of that before?
No, and I'm not really an expert on technical analysis, so
I don't know.
Feel comfortable answering that.
Well, I don't know what a rainbow moving average is. I really don't.
But Spencer, why don't we go ahead and play the intro?
Let's do it. Let's play the intro. We got a few guests lined up, and let's go.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have
breaking news.
All right.
Spencer, before we get back
Yep.
to the market, I have to be honest. It seems very trivial today to talk about the market.
I concur.
Cryptocurrencies, stuff going on.
I concur.
About what's going on in the financial world. I honestly could care less today. I heard you talking about before pre-market prep, not wanting to talk about the shooting yesterday and what happened, and I also don't want to. I feel in a way obligated to. I don't think it is sad. I think how desensitized a lot of us have become to this news because this comes just 10 days after the shooting in Buffalo.
Yep.
But I don't know. I mean, it's just so I'm tired and sick of it. And I know that is being echoed across the board. And it's, there's too many moments of silences, condolences, thoughts and prayers. is to the point where everyone should be fed up. Everyone should require action of their lawmakers, because at the end of the day, we live in a democracy, so we are all at least somewhat responsible for what happens in our society, and if not responsible, at least have the ability to impact the outcome. And to me, I mean, I was born in 1997. I'm too young to remember Columbine, but I remember exactly where I was in 4th grade when I found out about the Virginia Tech shooting. It was April 16th. I remember that because it was one of my best friends growing up's birthday.
Yeah.
And it ruined
that day.
It ruined that day. I remember exactly where I was. 5 years later, Sandy Hook. That was December 14th, just a few days before Christmas. And there's just no excuse for it anymore. I agree, Andy. I mean, people should be out. I mean, the fact, like, I don't know how anyone's just like going to work today not thinking about these kids that were murdered in cold blood. You know, I empathize and agree with Steve Kerr's thoughts. If you guys saw what he was saying before the Warriors-Mavs game last night, and he brought up a point that the House actually had passed a bill in 2019, H.R. 8, which is a universal background check law, which is it's supported by 90% of Americans. Doesn't matter what political side you are, 90% of people support this law that would bring universal background checks. The House passed it. The Senate refuses to vote on it because there are 50 senators that don't want to be on the record voting against it, because then their constituents will be able to say, hey, look, we all support this and you voted against it. This is not how representation is supposed to work. But they're simultaneously taking in money from gun lobbyists, so they're obligated by what the money they're taking in to not vote on it. And it's just bullshit that they are willing to take that money, want to hold on to their power more than they want to impact the outcome and what could save kids' lives. And I don't want to hear the argument that background checks or banning semi-automatic rifles wouldn't do anything. We have a federal ban on fully automatic weapons. Since then, there hasn't been a fully automatic weapon used in a mass shooting. There was the Las Vegas one, which was a guy used semi-automatic rifles with a bump stock to effectively make it a fully automatic rifle. And that was, by the way, on the Strip, where we just were a week and a half ago. We were in.
I thought about. Did you think about that? I thought about that.
No, now I am, because I was seeing pictures from the scene, and you can literally see the area where we were staying.
Yeah.
When that happened.
Yeah.
And I mean, I was distracted. We were in Vegas for the event when the Buffalo shooting happened, and I was distracted by other things going on, and didn't, obviously upset by it. But this, I think coming back to back is just like, it's just too much. And I
get it.
I'm not saying I have the answers. I'm not saying, but action is needed. And I hate the argument that, banning semi-assault rifles wouldn't. First of all, if that's the argument coming from the right, banning assault rifles wouldn't do anything, people are still going to get them anyway, then you could say the same thing about abortions. And the Second Amendment says we have a right to bear arms. It doesn't say we have a right to certain weapons. We already don't have that right. We've already outlawed fully automatic weapons. So how can you say we can fully outlaw those weapons, but then not semi-automatic assault rifles? It makes zero sense. There's no logical argument there, and you can't convince me otherwise.
Yeah, it's tough. And I think, and I said this morning as well to some people here, but just speaking from my own, I think I'm pretty normal in the sense that I've become desensitized to it in a lot of, and it's horrible to say that, right? It's so shitty to be like, yeah, it's just another thing, and it happens. Like you said, it happened last weekend, 2 weekends ago, right? And 10 days ago in Buffalo. And this is obviously a very the issue of the Second Amendment is a hot button one, but to Aaron's point, what is not at issue, I think we can all agree that mass shootings need to stop and are bad, and anything we can do to curtail that, I think, should be done. And the desensitization is probably the worst part of, just for me, obviously, to say nothing of the actual tragedy itself. But it's so bad that I feel like an asshole saying this, but like I went on with my day yesterday. You know, I went on with my day.
And there's, I mean, we all have to, and I'm not saying that the world should stop and we should.
Right.
I mean, I would, if President Biden or whatever said, hey, we're going to not we're just going to take a break and figure this out, whatever. I don't understand, but the world goes on. We have to do, and we will get to stocks. And I see some people commenting in the chat, but if you are someone that wants to just go somewhere where people will talk and reaffirm your beliefs and not give stats that will refute those beliefs, then you can go ahead. I do not blame you, but I'm not going to just give my opinion. I'm going to talk about some statistics here. Someone in the chat said talking about it means they want. I disagree. I mean, I'm not talking about the guy. I'm not going to say his name. I'm not going to say any of his ideologies or why he did it. I'm talking about solutions. I'm talking about actions that could be taken. And that first action to me is obviously the senators voting on this bill that was already passed through the House with bipartisan support, mind you. Kyle in the chat's talking about how many shooting deaths are in Chicago, even though there's a gun ban. And again, I'm going to talk about statistics here. That's kind of anecdotal. In Chicago borders Indiana and Wisconsin, where there are very lax gun laws. Most of the guns that come into Chicago come from those states. Here, and we don't even need to go out of the United States to look at some of these statistics. For some reason my screen's not letting me share this window.
I mean, I'm like you, and I remember I'm also a little bit too young to remember Columbine, but because I was only, I think, 8 years old when that happened. But I do remember vividly Virginia Tech in 2004. Was it 04 or was it 06? I think it was it
07.
07, sorry. Vividly, sorry, I didn't get the year right, but vividly remember that day. And it was like, we haven't really come anywhere in the 18 years since.
Yeah, and that's the worst part, is that it's and there have been certain actions taken, right? I mean, when after the Vegas shooting, they banned bump stocks that made semi-automatic rifles fully automatic, and there's a reason for that. And again, I mean, I see people in the chat saying that it says that shall not be infringed. Then how come we already have a federal ban on fully automatic weapons? There's literally zero logical argument why that would be permissible, why that is constitutional, but a ban on semi-automatic rifles wouldn't be.
Yeah.
And then here, I had to update my computer settings to allow me to share this, but this is what I was saying. You don't even need to go outside of the United States to even see this data, and this is just data. And to steal a line, I guess, from Ben Shapiro or whatever, facts don't care about your feelings. You can see right here, states that have more gun ownership have more gun deaths. States that have more gun restrictions, so New York, Rhode Island, New Jersey, New Hampshire, Connecticut, Massachusetts, have less gun deaths. The more readily available guns are, statistics show, equates to more gun deaths. I don't understand how a kid who isn't old enough who's deemed not mature enough, not responsible enough to buy a beer,
background checks
to go legally, right? And background checks again are
not exactly the highest bar to clear. Well, we can't even clear that bar.
Well, and the background checks again are supported by 90% of Americans, and we live in a democracy. So if something is supported by 90% of Americans, that's what should be enacted in law. And then if it's not, then we have to look at why is that happening? Is it lobbying? Is it senators just wanting to stay in power? And there are now Republicans. Yeah, and again, I mean, you can handpick examples all you want, but at the end of the day, we can look at empirical data. And so to me, it's long overdue.
I think we can, and there's very little consensus, obviously, on like what should be done. You get a lot of debate about that, but something needs to. Doing nothing is not
Right. And
is not the option here. But of course,
Right.
that's what we're all used to. That's what I'm used to, is nothing. That's why I, when I saw this yesterday for the first time, I took a moment and I thought about, Sandy Hook and Virginia, and then and Virginia Tech and Parkland, and then I said, oh, that's sad. I don't think anything will. I hope something comes to this, but I doubt it will. And then I moved on with my day, and that's the worst part of all this, is the complacency. And I feel terrible about
and
it.
even so, I was on the phone with my buddy after. We weren't on the phone about the Buffalo shooting, but it was like it was like right when we got back from Vegas,
Yeah.
and he's very conservative. He's in the Army. He's an Army Ranger, actually.
Oh, nice.
And so he's very high up, and not high up, but he's very, you have to go, he's like special forces in the Army. And
Yep.
we were talking about the shooting, and he said, like, there's literally no reason a civilian should have a gun like that. Like, if you want a gun to protect your home, fine, get a pistol, get a shotgun, get a hunting rifle. You want a gun to go hunting, fine. What if you've ever shot an AR-15, which I have, you know how powerful they are, what it does to a human body, let alone a 10-year-old human body.
Yeah.
So to keep allowing this to happen, and mind you, we are the only country. People say mental health. All countries have people with mental health problems. We are the only country with a mass shooting problem.
Yeah.
Everywhere
You're right.
has mental health. Everywhere has mental health problems. We are the only place that has mass shooting problems.
Scotland-
So
Scotland had a mass shooting.
and I agree. By the way, we do need to help. Our mental health. What's going on in the country, and there are a lot of measures there that I support. But to say that's the issue here is just not looking at the facts, not looking at what's going on around the world.
Scotland had a mass shooting, and afterwards they dropped the hammer on guns, and no mass shooting since then.
Same with Australia.
Australia had a mass shooting. They dropped the hammer. No mass shooting since then. We have a mass shooting. Thoughts and prayers. And
we have 2 in 10 days with using the same type of gun, and people will still argue it has nothing to do with the gun, or has nothing to do with gun control, or has nothing to do with that. And I just don't accept that as true, because you look at the facts and it doesn't add up. You look at America, where the guns per capita is way higher than anywhere else in the world, and guess what? So is deaths due to guns. And it's just simple when you're actually looking at the facts. More guns equals more deaths related to guns. I understand, right? If we completely outlawed guns, people would still find a way to inflict this type of terror. But does that mean it would be as easy as an 18-year-old kid walking into a store in Texas, buying 2 AR-15s like 2 days after his 18th birthday, and then a week later walking into a school and killing 20 people? It should not be made that easy.
Have you ever seen the Jim Jeffries bit on gun control? I don't make a habit of
Jim. He's
a comedian,
the Australian comedian.
Yeah, I don't make a habit of getting my opinions or anything from comedians, and they will be the first to tell you that, oh, it's just jokes. But Jim Jeffries is a comedian who did a very good bit about gun control several years ago now. It's on YouTube. If you go on YouTube and just search Jim Jeffries gun control, it's the first thing that pops up, and it's a very good, I think, well thought out bit all about how messed up this country is with regards to guns. So this is probably not what you guys want to talk about. I don't want to talk about.
Well, I guess my last point is
I don't want to think about
the
this,
argument of
right?
we need specifically AR-15s to protect ourselves against the government is just, to me, a terrible, illogical argument. If you talk to anyone who has any knowledge of the military, who has served, ask them, hey, if the military really wanted to do some sort of, would the civilians be able to do an uprising against the military with AR-15s? The answer is no. Look how much money we spend.
I will quote Jim Jeffries. They have drones, right?
Right. Well,
the government.
Okay,
you're bringing a gun to a drone fight.
Yeah, you go get in group up with a bunch of vigilantes or whatever with AR-15s in a warehouse.
Yeah.
We have drones. We have planes. Like it's just not. Yeah, it's not a sound argument. It does not.
Bringing a gun to a drone fight ain't gonna cut it, ladies and gentlemen.
Yeah, and you do not need an AR-15 to protect your. I mean, those are all just. Those are talking points perpetrated by the NRA, by the gun lobby, and if you just accept it as fact, sure. But if you look, and by the way, too, I mean, even just talking about guns in homes, in America, you are way more likely to use the gun on yourself or a family member than you are to protect yourself against some intruder. I mean, I don't even know. I would love to see the stats of how many times someone protected their home with an AR-15 last year versus how many, suicides or homicides with people they know from guns.
Yeah. Shoot, I just had a thought I was going to say. Oh, yeah. The whole thing, I got to protect myself. That held water 100
100%.
150 years ago.
100%. Especially that when you take into account the founding fathers were founding our country, escaping a tyranny. And
that argument used to work. It used to be a good argument.
And
it's not
and the idea that the founding fathers literally put it in the Constitution, the ability for us to ratify it, and change the Bill of Rights for cases like this, because they foresaw that as time changes, some of these laws might get antiquated, might get outdated.
Yep. That's exactly it. All right. Again, we don't want to talk about this. I don't think even Aaron wants to talk about it. I'm assuming, but it's sort of hard to escape, and
it's always easier to just not talk about politics, not talk about controversial topics. 100%. But I'm from the stance that we should, and I know there are people in the chat that don't live here in the United States, but as we live here in a democracy, you should want to improve your country. You should want to, that you have the ability to do so, and it's. To me, I'm hopeful, and I'm seeing more and more people speaking out and wanting action and willing to act on this, on both sides of the aisle. And again, I don't understand how that's acceptable. How the senators can sit on this bill for 2 years and say, "Hey, we're just not going to vote on it." That's how the legal process works. A bill gets passed through the House, and then the Senate votes on it, and then the president either signs it into a law or it gets vetoed. The fact that they're just stopping, saying, "Oh, we're not going to do this. We're not going to vote on this," is just utterly disgraceful.
Yep. Get out and vote is the answer to most things. Although, as Aaron said, it only goes so far. A few people mentioned the gun stocks. This always gets me a little bit. Wall Street has this unique ability, right, to throw shame out the window. Always, for everything, right? I mean, ask the people buying that were like, oh, how, March 2020, COVID, we're in a pandemic, how can I profit off this? I can buy vaccine stocks, right? Or there was a thing, every year, during hurricane season, right? Oh, I can go long Generac or go long Home Depot and Lowe's, short the insurance companies and profit off of hurricanes. And listen, if you want to do that, go for it. And if you want to trade gun stocks today, go for it. I'm just a person. I can't stop you. There are a handful of gun stocks out there. They are all up today. The logic is that, and this happens every single time, by the way. Every single time there's a mass shooting, the gun stocks always go higher, because the same logic, the same circle of logic always comes out where, oh, there's going to be gun control. People are going to want to buy guns now to get ahead of that gun control. Those profits are going to go up because people are going to go buy guns now. And it goes in that circle. And if you want to go and participate in the market, heck, I mean, that's capitalism, baby. I mean, go for it, right? Be my guest. But it always makes me feel super dirty to talk about any trade, any stock, when there are lives at stake, whether it's a mass shooting or whether it's like a hurricane and a natural disaster and trades to be made off that, or a pandemic. Obviously, it just gives me this dirty feeling, and I don't like doing it. So we're not really going to talk. That's the most we're going to say about the gun stocks today. They're out there. You can easily find them. Go for it. Trade them. Buy them. Short them. Do whatever it is you're going to do. But I find, and that's why the market exists, but I find profiting off of this, off situations where people are dead, that's not why I do this. So that's all I'm going to really say about the gun stocks there. So we don't really have to talk about that. What I do want to talk about, though, is we should probably tell you who the guests are today. So we're going to have our first guest on in about 5 or so minutes. Options Mike will join the show for a few minutes, hang out with us. We're going to have Nic Chahine He's the head of Benzinga Options. He will be on at 1 o'clock, and JC Kaylor will be on at 1:30 from Elite Trading. And those are our guests for the day. One thing, and if I can do my very best to segue off of this, Aaron, and sort of, it'll be really awkward, but I will try. Although actually maybe not the worst segue, because you actually can buy guns at this store. But Dick's Sporting Goods, okay? Or maybe you can't anymore. I don't even know. Did they change?
They took their guns away.
They did?
Brought them back.
Oh, they brought them back?
Yeah.
Okay, well, there we go. Well, Dick's Sporting Goods, I mean, it's a retailer. Okay, sure, you can buy guns there, but that's not where they make that's not their bread and butter. Dick's Sporting Goods reported earnings this morning, and this is a prime example of how sometimes these executives go on the conference call and they say something that changes everything for that day. Maybe they say something positive, maybe they say something negative, maybe they hold the bad news until the earnings call. And you have to wait for the call to get the bad news. Well, today, they held the good news for their earnings call. The good news, and it was at, 9 o'clock this morning, they were talking up their ability to chew through their inventory. Not the same problem that Target and Kohl's are having. I think the money quote was, we expect our performance, meaning the performance of their business, to continue to meaningfully exceed 2019 levels. That was, I think, the money line that people keep throwing out there. That's from the CEO, Lauren Hobart. So anyway, Dick's Sporting Goods, if you were coming in today, you're like, oh man, this thing is a disaster. The guidance was terrible. Apparently it wasn't as bad because the stock has now gone green. Huge reversal for DKS. Maybe some of this is a result of the trade happening in gun retailers today. I'm not gonna say that. I'm not gonna discount that entirely, but you can clearly see, because the conference call started at like 8:30 this morning. You can clearly see the bottom. Actually, the bottom was at 7:45. But we had some clear buying activity at 9:15, at 9:30. So big turn. You don't see these events very often, especially with what's happening in retail the last week. It's been an absolute disaster, but nothing goes straight up, nothing goes straight down. I want to look at Kohl's here for a second. Oh my gosh, did you see this?
Mm-mm.
Look at Kohl's today. Wow. Wait, do we have news or something? Yeah, we have it right there. Kohl's shares trading higher following reports that bidders would lower their offer for the company to around $62. Okay. Time out. Do you really believe that someone's coming in to buy Kohl's at $62 per share? Is somebody going to pay up 50% for this company? No. And the market does not believe it either. Because if it did believe it, we'd be in the 50s right now. And we're at 42. Okay. I call bullshit. I call bullshit on this headline. I call bullshit on this move. I'm going to go ahead and say that part of this is just relief buying, but I call total nonsense on this Kohl's move. Okay, what else was on my list here as I'm like ignoring the chat right now. I don't even want to go near the chat right now. People are fired up.
Yeah, and honestly,
that's a really good idea.
Honestly, I don't know why. I honestly don't know why this is a polarizing issue. It's like everyone should want to do something to help ensure that your own kids are safe going to school. I mean, it's that simple.
Double trouble.
I don't know how. I mean, Spencer, I don't know how you feel. Like I don't know how seeing that stuff like makes me want to not have kids.
It makes you want to homeschool your kids, which I mean, it does make you want to not send your kids to school. And I can't even imagine being like, we're not, look at us. We're not parents, right? We're a little bit young, but I can't even imagine being a parent. I literally can't. And sending our kid to school. Do you remember when, like, or maybe, I don't know if, like, you're maybe a little bit young, but, like, we didn't always have lockdown drills in school.
Yeah.
It wasn't until after Columbine that they, like, started doing the lockdown drills. That was like a big change in 1999, I think. But, yeah, today's the kind of day where you're, like, you don't really want to work at all. You don't really want to do anything. You just want to, you know, feel your feelings and call for change and call your representative and hope they do something. But I don't know. I really don't. So I'm sorry that we're so down today. But actually, no, I'm not sorry, because that's how most people are feeling, and I think it's okay to feel that way. We just had a very long company-wide meeting yesterday, just about mental health. And this sort of runs parallel to that, where it should be okay.
Well, and Anthony Wilson brought up a good point in
Yeah.
the chat, just that he said the U.S. has a lack of facilities, lack of early detection. That's what I was saying. I undoubtedly think we have to do more in terms of what's going on in like mental health crisis. I mean, you look at the overdose rate and what's going on, and unfortunately just millions and millions of Americans have felt left behind. And I think a lot of these societal problems do run deeper than gun rights. And you know, I 100% agree. Banning guns isn't going to, you know, solve all these issues. I'm not saying that. But I'm saying it's silly. It's silly to look at stats, at data of around the world, or even within the United States, like I brought up, and then argue that it wouldn't make an impact. I'm not saying it'll 100% solve everything, but to argue that it will make zero impact, I mean, is just, and I've seen that argument made specifically about this shooting, that even having background checks and all this stuff wouldn't have done anything. It's bullshit. I mean, again, we can move on. We have our next guest here.
This comment from Double Trouble. That's really cool what they're doing. Double Trouble. I'm going to, or maybe Aaron, one of us, after the show's over today, we're going to go talk to the powers that be here at Benzinga, I think. That's a very good idea. So thanks for sharing that, Double Trouble, because that's the kind of thing that's like, it's such a small thing, such a small act, can go a long way. So all right, let's bring on our first guest of the day, and we can move off this topic, as difficult as it is. Options Mike is joining us now. He's here backstage, and he has opinions about things, as do we. And hopefully we can agree on them. And if we disagree respectfully, right? That's the key there. Let's get Mike on the show. Options, Mike. How's your Wednesday going, man?
Gentlemen, it's been a nice day, you know.
Okay.
Doing it, hanging in there. I'm in a pretty cheerful mood this morning. How about you guys?
Good. Cheerful is a strong word, but we're getting through the day. We're green out there, which, you know, is not the first time this week I've been able to say that, because we were green on Monday. What do you make of these intermittent green days, right? We were green Friday afternoon, we were green Monday, we're green today. We have these intermittent rallies in the midst of what is essentially a bear market downtrend. What do you make of that?
I've been seeing, I started pointing out on Sunday, there was a bunch of little divergences in the market that were starting to form, leading me to think that we could get a bounce. And I'm still seeing them. And right now, I think this market's trying to go. We have the Fed minutes at 2 o'clock today, which I don't expect anything earth shattering, because they've already run their mouth nonstop, because they can never shut up with their opinions since then.
It's true. It's not even the fact that it's old news. It's like after the meeting, they all go out and give public speeches anyway. So it's like, how much, what could possibly be different from the minutes and then their post-meeting speeches, right? It's all the same stuff.
Well, except they get their own personal opinion, and, you know, I think this, or I think that. The bottom line is here, you know, we'll see how we react after that. We're going into a holiday week, right? So
great
Memorial Day
point.
weekend. volume is probably the highest we're going to see is probably be today if we're going to see any volume, and then the next
Great
2 days
point.
will be quiet with Monday off. So I think the market's looking to take a little bounce here. It's just taking its sweet time and getting there.
I do want to mention briefly that we did have an M&A rumor just hit. Valvoline, ticker VVV, is halted because Saudi Aramco reportedly approached them for a deal. So VVV shares are halted right now at 32.27. So I always forget that stock is public. Anyway, back to the overall market here. So what have you been trading today? It's a really good point about the holiday weekend. We should expect to see volume taper off Friday. Especially Friday afternoon, so that can mean increased volatility when there's less people at the game.
Or just let the algos take over and grind whatever way they think they could hurt the most. That's typically what they do.
Yeah, that also works. So walk us through some I see you have your chart up on the screen here. Let's what are we looking at here?
That's the spot. So
okay.
I just put that up for you guys there, and you can see that big move last Friday off the lows, and they tried to break the market. They tried to get us officially into a bear market. A 20% correction would be a close under the 383.98 level, and right into the close Friday they came screaming for the market and they popped it above there. And so there's this unwillingness to have the market say it's in a bear market, even though we're acting like we're in a bear market. The Qs are in a bad market, the IWM is, and so many other names are. It's not even funny. But the SPY and the diamonds are not there yet, and they keep pointing their finger saying, no, not a bear market. See, we're not there yet. So you have that going on here. If you're looking for one of the divergences, let me show you.
And I'm also just watching Valvoline, which just came out of that 5-minute halt. So Valvoline now, yeah, it just popped to 35. Well, I don't think it got quite that high, but maybe it did.
On the nose.
On the nose? All right, 35 on the nose. Yeah. Okay, just watching that. But sorry, what is this? What is this right now?
This is the HYG. These are the corporate junk bonds, right? Corporate debt.
It's not junk. It's high yield.
Yeah, junk.
High yield.
High yield bonds.
So you ever seen The Wedding Singer? That's what he says. He goes, "It's not junk, baby. It's high yield."
High yield.
So,
good movie.
Yeah.
These are often the canary in the coal mine, and these have been weak forever, leading the market down. And what we've noticed here is you have this divergence now that has developed over the last couple of sessions, where you can see the yields are coming up. We're seeing them buying, coming up here. And typically, if this holds, the market will typically follow it eventually. And that's why one of the reasons I'm seeing here is a little divergence here that's set up here. The other divergence we're starting to see is in bonds, Spencer, and this is a big one. Bonds have been so weak. We took back the 21-day, and we're trying to push up. Again, slight change in character in the market. Sometimes these can be clues. Now, please, I am not trying to call a bottom because nothing's changed in the market, right? The macro story remains exactly the same. But within downtrends, we can have very vicious bounces or nice playable bounces you can make money on. And the last one I saw over the weekend was the IWM. And where the Qs and the SPY all made new lows, the IWM last Friday did not. It put in a higher low. So I see some divergences setting up here in the market. And maybe we're setting up for just a bounce, a short-term bounce, maybe just to the 21-day on the SPY. Not necessarily a huge number, but there's definitely room for this market to push up. And sentiment is so nasty right now that also generally helps. Too bearish.
What would be? Let's say we do get that. At what point do you want to come in and say, all right, I'm ready to short this market right now?
But I mean, you let the tape tell you, right? So right now,
so that's what I'm asking.
This is the Fed day. We failed at the 21 days. So the first big area I'd watch would be the 21-day on this market. If we cannot get through there, that would mean the market's extremely weak. You notice you have a little gap that's kind of sitting in here, and then you have another little gap that's sitting up here. So then if we fill both those gap areas and we get ourselves up to the 413-ish area, 411 area, that would be another place I would take a look. And then, we could bounce all the way to the 50-day and still not change the structure of this market. And that's how far we've come down. So you can get all the way back up into the 425 area and short there if they really want to scream it. And remember, we can get big bounces. Remember back in March, look at the size of this bounce. It lasted about 3 weeks, right? So you can get more than a couple-day bounce in this market. But for me, the 21-day is the first big test. That's going to be the big one.
All right. What about for individual stocks, though? Because there's a lot of action under the hood here. what have you been looking at? And walk us through a setup or two, and then we'll take some questions from the chat.
So you can guys request whatever you like. So energy remains the bulletproof area of this market.
Is it
so
XLE? Yeah, ExxonMobil just can't stop, won't stop.
Right. So XLE new multi-year high today. Chevron put a new all-time high in today. It's hard to chase these things here. MRO new multi-year highs. Devon, right? These things remain strong, but to me, there's nothing that's going to stop crude. I mean, what's going to stop crude coming up, barring the war ending and sanctions on Russia being dropped overnight, which I don't see happening. And I think crude's going to get really bad for all of us is when China decides that we can't just stay shut down forever, and they reopen their country, and all that oil that's currently being
all that demand comes back online. Yep. Okay.
So that worries me. But everybody's looking for setups in tech, and that's been the weaker area. So let's talk a couple of them. Let's talk Apple, because Apple had great trades on this thing all day on Monday.
Ooh.
So you had this nice, easy bounce. And this is something you would look at here. You see how it bounced right to the 8-day of the gold line and rolled over?
That's the 8-day moving average?
Yep.
Simple?
And you see it did it up here again. These are the EMAs, right? And you can see here, this gold line has been in control now all the way since back here when we broke below it on the 5th of May. Every touch to it has failed and rolled over.
I'm gonna make your chart a little bigger here. So again, this is Apple. All right, so the gold line, so say it again, the gold line's the 8-day?
The 8-day EMA. Okay. Right? Since the 5th of May, where we blasted through it, fail. So this is in control. So when you're looking for trades now, and if you're looking for something more than a day trade, you're looking for either a name that's oversold like Apple was, which made it a great trade on Monday, or you're looking for a change in character where it can take out that 8-day intraday with volume or close above it before you start looking for these things to change character. And, when I look at a lot of charts, I notice a lot of them are hitting the 8-day and stopping. So it's not a good sign.
So again, waiting to see. So would you buy Apple if it closed above? Would you buy Apple tomorrow if today it closed above the 8-day, which is 142.15?
I would consider it tomorrow based upon what we're doing tomorrow and what we look like and where it's at. And if we close over the 8-day today, I would consider trading it tomorrow. I may even take a swing on it through the weekend, through the end of the week. But I probably wouldn't want to own any of these names long term yet in my portfolio.
And under that scenario, again, let's just say Apple closes at $143 today, so it would close above that that 8-day moving average.
Right.
What is your out? What is your stop there? Is it the 8-day? Is that your exit? Is that your exit plan?
It would probably be then the 8-day at that point. If I broke below that, it would be my exit. I'd probably put a sell order and up around wherever the 21 days, around 147, let's call it, and see if I can get filled if it ran.
Question from Darren F. Why use the EMA over the S? Well, first of all, let's explain the difference between the EMAs and the SMAs, because the SMA is simple moving average, EMA is exponential moving average, and they do different things.
Right. So the simple moving average just takes the period and divides it by it. So if it's 8 days, it takes the 8 days of action, divides it, and gives you the moving average. What the extrapolated moving average does, it takes the more recent 4 days and puts more weight on those in the previous 4 days. So it's more in line to the current price action. So on my short-term moving average, that's why I use that. Yeah,
the bottom line is the EMA puts more importance on the recent recent activity, and the SMA says every day is weighted is equal. Every day is equal, and the EMA says no, every day is not equal. Yesterday is more important than 2 weeks ago.
Correct.
So you kind of got to just weigh them both, and honestly, if you don't know which is better,
use the simple.
I would say use both, and then figure out for yourself which one looks better. Which one can I see better? Right? It's all about how you see the pattern, right? Which one do I see better on the chart? Which one do I think does a better job of projecting trend out and acting as resistance or support, and then go from there. Okay, what about Coinbase here? This is interesting. Coinbase is up very nicely today, up 8%. I did not realize this until Ali in the chat just brought it up. Granted, everything is mostly up today, so it's not as if Coinbase is doing this by itself. But what do you make of this one?
I think this is a very broken name and not a name I want anything to do with in this market.
You're no fun.
I'm sorry. Well, I mean, here's the thing. There were people screaming buy this thing up at 400. I'm not
Well,
going to name
all right.
names. and now they have, and that was when they were first to market. Now you have a ton of competition, and you have the big banks now starting to allow you to buy crypto, and then like you're gonna see Thinkorswim and E-Trade eventually saying, why do you need to use Coinbase? We'll give you a crypto wallet here. And yes, they're up today, but they're also down to $66 stock. And there's your gold line. And look at this action here. All the way since back up here. Look at the 8-day failures all through the yard. One day it closed above it, then gapped down and trapped everybody, and that was it. And here it is stopping right at it again. I mean, so some of these names like Coin are going to bounce, but I mean, for me in a market like this, I want to stick with either the names in play or the names that are stronger. Last week we saw names like UPST and Affirm to have big rallies for no particular reason whatsoever, and they're slowly fading and giving them back here.
Okay, let's find charts that aren't as broken as Coinbase, and let's go to like Amazon here. Amazon's having itself a day, right? It's been a hot second since I looked at this chart. I know it's got the split coming up, right? And like
split is on
couple what June
6th.
June. I was gonna say June 10th. June is it really June 6th? Oh
yeah.
Wow. Okay, so really coming up here.
So I believe that on Friday is the last day to take advantage of it.
This Friday. That's good to know. So if you want, and this really doesn't mean anything, but if for whatever reason you want to participate in the split, meaning you want to, basically this Friday is the record date, so that's the day they're going to go through. Okay, these are all of our shareholders. They all get more stock for the same for a lower price.
It doesn't change anything.
It changes nothing. It should just forget it.
Split coming, right?
Just forget it. Yeah, the record
20
date.
for 1 split, which now is going to make Amazon a $210 stock.
Hey, it's cheap.
Well, it's a game changer.
I'm joking.
Isn't it?
I'm joking.
It does change it.
Well, yeah, it does change it for, and there's one clear reason why is, two things. One, it makes the options more affordable, and B, it does make the stock eligible for inclusion in the Dow Jones Index, which is kind of the only reason I would think that they would want to do this split in the first place. Dow Jones is the third or fourth most followed index in the world, although I don't really know how much money is pegged to it.
More tradable by retailers and day traders.
It does. It does make it more tradable. It makes it more tradable. This will be a very interesting experiment, Mike, to see how much influence retail, quote unquote retail. No, let's not use retail. Let's say smaller traders. Let's see how much influence they have on a stock, because we know what the beta of Amazon is now. Let's see what the beta of Amazon is in 3 months, right? And I'm gonna venture a guess that it really doesn't change a lot. I think it would shock most people just how much of this is just computers trading with other computers.
Yeah, but let's talk about what happens. So right now, Amazon, let's say a rough average trades about 3 million shares a day. That's just a very rough, holding my cursor over the.
All right. Well, that's gonna go way up.
The volume. Well, that's what's going to change, right? So It's going to be a much more liquid stock, which means the options, instead of being spread by 50, 80, $1.50 at times, should be tighter. People will be able to trade it with stock easier now than trading it with just options. So it's going to open up a lot of possibility. It's going to be more in play as a day trading name. So we'll Google when they do their split. But here again, here's your 8-day moving average. And, since earnings day, where we failed at it, right? We had one day we closed above it.
And that's it.
That's it. And today we went right to it and rolled over from there for now. Okay. So, I mean, again, I'm seeing this on so many names, right? And this is, problem. Microsoft, which probably had one of the best earnings reports in the big tech companies, right? Fabulous beat, guided up again, and look at this.
I know. It's almost as if it didn't happen.
It's the valuations. I think we've been talking for a while. I think valuations has finally come into play here.
But again, it's Microsoft. It's not this isn't Coinbase.
Right.
This isn't Microsoft. This is a company that prints what do they have? The second or third largest cloud unit in the world. I mean, they print money.
And they print money, and they're not in tremendous debt. They're not have huge problems, but it doesn't matter.
You're right. But again, we always talk about okay, what do you want to buy? What should I buy? I went all cash or whatever, and all these things are down. And what are you buying? What are you buying? Well, what I would buy is companies like Microsoft, right?
Yep.
If I was going out long enough, if you go out long enough and you've got a horizon of several years, you want to buy good companies when they come down like this. You don't want to buy you don't want to be a hero and call the bottom in a stock like SoFi or Coinbase or anything like that, right? Where you don't know. But with Microsoft, you kind of know. Microsoft ain't going out of business and anytime soon. Neither is Apple, right? Neither is Amazon, right? Neither is Google.
Now, Microsoft may not be the leader when this is over, and what I mean by that is, we've gotten used to Microsoft and Amazon and Google and Apple with all these huge runs. And you look at the monthly chart on Amazon for 20 years, right? What I'm saying to you guys is that it's nothing going to be wrong with an Amazon or an Apple or a Google or a Microsoft, but they're probably not going to be, when we have our next run, whenever this turns around, they may not be the clear winners. It's probably going to be some of these newer names that are just starting to make money that are probably going to catch some people's attention. And that's the thing to start watching for.
Great point.
For me, I continue to like a name like Square because they're so good in their space. And even though they had this huge run, they come back.
Square is a great example of a stock that I said, oh yeah, I would love to own Square when it was, as it ripped higher 3 years in a row. And how high did the thing get? It got to like $300 or close. All right, and so all the way up to 150, 225, 250. Oh, I wish I bought this thing. Now that we're down at 75, it's easy to talk a big game when it's going up. Oh yeah, I would have bought it. Well, it's hard to buy it on the way down, right? It really is.
You have to let the market tell you when to buy. And I think what most people don't realize now is, you're in a survival market, which means you don't just go running out and just buying things left and right. If you're doing this for a living, like the most of us are doing, you need to survive. You make money, you try to make money every day, keep your losses small, and just try to find ways to keep picking away at it, waiting for the time to put money to work.
Yeah.
And a name like Square, even though it's in a downtrend, I like this name long term. I like it more than PayPal because I honestly, as much as Jack annoys me sometimes, I think he does a better job of this company. I think PayPal's management at this point is just horrific. They've lost their way. They just completely lost their way.
The PayPal chart is objectively terrifying. Just terrifying. Absolutely terrifying.
And I do like SoFi. But they need to get those student loan moratorium off, otherwise they got problems. Because so much of their money evidently is tied up in those making money on those loans.
Why are my audio levels louder than Mike? Good question. Producer AT, can you look into my mic levels? I don't feel like I'm louder than Mike, but maybe I'll move away from the mic. A few people in the chat talking about Coupang. I didn't realize that was even still around, honestly. CPNG, $13. Oh, man.
Yeah. I mean, here's one. CVNA. I mean, there's a lot of these companies that aren't going to survive. Carvana, nobody wants their debt. You could just look at this fall, and nobody wants to own them down here. They were trying to auction off some debt, and they couldn't get anybody to take it.
Yeah, when you can't get any buyers for your debt, that should be a glaring red flag.
Right.
Like crazy red flag.
So you need to do your homework down here and say, I need to understand that a company like Carvana, while it'll bounce with the markets at some point, may not be a company I want to be in. To your point, you want to stick with bigger companies. I continue to watch Disney for some point in time when they start treating this company as a streaming company and back to what their bread and butter is, which is their theme parks, their cruises, and their movies, which are all doing great again, but they're still getting treated as a streaming company from the market's perspective. And their P&E is still up in the 50s, which is probably one of the big problems as well.
Yeah. The other thing, that's the craziest part of all this too, is like these stocks have all come down 60, 70, 80, 90%. And yet the valuations are still high. Like Nikola, or the market caps, I mean, and the ratios. Nikola has a market cap still of like $2.5 billion.
And how many
still.
times have they made?
Exactly. Right. right. And so after all this time, Nikola, the stock that went from 100, no, it never got to 100. It was 90,
close.
It was 93.99 is the high, from 93 to 5, and it still has a market cap of $2 billion. And you're like, oh my gosh, what does this company even do?
Everybody keeps asking me FSR. I'm like, they're not even scheduled to begin production until November. Why would you want anything to do with a company that it's not doing anything? If you want to take a flyer on somebody in this space, I mean, I think Lucid, they're doing it. You know, they're still losing money. Please, that doesn't make them a safe name. But they're at least in production and ramping up production. They're trying to take that to the next step. So is Rivian and, Neo. But, all these names, it's going to take them a long time before they see numbers back up here in the 50s again, if ever.
I couldn't agree more. All right, Options Mike has been on with us for the last 25 minutes or so. Let's see if we have any tickers in the chat. What about Roku for Vinit? Vinit A.
Roku, I love the company. I think they're turning it around. Their valuation's more in line. It's got to clear the 50-day. That purple line there has been a big problem for it. Until this market turns, I would avoid this one. I think it could go lower because it's still lumped in with the streaming companies like Netflix and Disney and Fubo. What else?
What else? Gosh, these are all this. These are not my kind of charts. These are not names that you want. Let me go away from tech here. And
NVIDIA has earnings tonight, guys. So I see somebody asking about NVIDIA in there. You're gonna have to see what it has. An implied move, I think, is around $16 or $17. I think it's going to be a good report. I think they're going to give good guidance, but like AMD, can it hold it after the pop, right? If it gets a pop, but you have to see what they say tonight.
Yeah, that's the big one.
Yeah,
that's the big one for the night, no doubt. And here, you know what?
They've been killed.
I'll bring up the calendar for you. So this is the calendar for tonight or for the rest of the week here.
You got snow tonight.
Where's my? Oh, it's not here. That's bizarre. Here, you know what? I know where it is. Here's my calendar. Okay. NVIDIA, Guess, Williams-Sonoma, Snowflake is the other big one.
Yep.
Splunk and Box. So we have software, and we've got NVIDIA and a couple of retailers tonight. Tomorrow morning is massive. Alibaba, Baidu, Macy's. The bar is so low for Macy's.
The dollar stores.
Both dollar stores. Burlington's probably going to be a mess as well.
It's the next 36 hours. I've been saying this from tonight through Thursday night are huge.
Yeah. And don't forget about, like, on Friday, like Hibbett Sports, which got crushed today because of Dick's Sporting Goods. They didn't even do anything yet, right? They didn't even do anything. And the stock was down. I mean, I think it's up. Oh, wow, it's up now? Holy crap. They all just turned
the whole
on this.
sector, the whole retail sector.
They all just turned, yeah.
So Dick's guidance was bad. I mean, it really was.
I know. They guided that their same store sales was going to be down.
It's like there's some horrible number.
It's going to be down.
But these names I guess they're just up because they've been sold off so much after Walmart and Costco and all that. Walmart, Target, but I don't have any faith in these guys to turn it around. I think this whole sector is in trouble, and I'm going to leave you guys with this thought. I said this to members the other day. I think we probably already in a recession, but the numbers don't say it. But the country and world's entering into a recession earlier, and nobody wants to admit it.
I think that's fair. I think a lot of economic labels like recession or depression or labels in general actually are lagging. Like think about back when the WHO called COVID a pandemic. It was like May, and everyone's like, oh, gee, yeah, you think? Like,
Thanks, guys.
right. But until it meets whatever arbitrary textbook definition, you don't want the powers that be won't label it until it meets that. But
Right.
but it didn't take a genius to say, oh yeah, it's a pandemic. Just like it doesn't take a genius to say, yeah, we're probably in a recession. And just to be clear, all recession indicates is it just means slowing GDP growth. It doesn't mean like not every recession is like 2008. That was a particularly bad one, but recessions happen all the time.
And we're seeing it. I mean, if you listen to Walmart and Target's reports, all of their big ticket items were falling off, and then you saw it on GDP this morning.
Yeah,
you see it there. You see these
oh
things.
Shoot! Wait. Was that reading out today?
GDP this morning. Durable goods.
Thank you. I was going to say you gave me a heart attack.
No,
durable goods. We were joking that it was zero. Nobody bought any durable goods because there were none. But no, there were some, but it was not many.
So anyway,
yeah. All right, options, Mike. How can people find you?
You have a website, smartoptiontrading.com. If you want to join us, we have Discord, Twitter. You hear my voice for 8 hours a day. God help you all.
Oh, gosh.
Or you can just find me for free on @OptionsMike on Twitter, and I post a ton of stuff, including charts, about 50-plus charts every day on Sunday. So follow me there if you want to learn more.
All right. Mike, have a good one, man.
You can too, guys.
Thank you, Mike.
All right. What else was on our list here? Let's check in on crypto. How's crypto? The last couple of days have been mixed. Let's check in on the heat map if I can find it. There it is. And see how we're doing in crypto land today. Mixed again. That's the takeaway. Mixed again. Christmas tree out there. Green, red. I don't really know what to say about crypto right now. Right? I'm shockingly good at burying my head in the sand with my problems in life and with my portfolio as well. Like shockingly good. So I have not opened my Coinbase account in probably a month and a half. So I have absolutely no idea how I know I'm down. I know I'm down. That's all I know. And that Solana is really rough to see it at below $48. But I don't know. I really don't know what to say about it, honestly. Part of me wishes it would just like wash out already. It does a number on your psychology when things stay down for prolonged periods of time. Like I think most people would prefer a like flash crash, V bottom, like March 2020 or. Yeah, because that was a crash. That was a market crash, and that V bottom was so freaking vicious. I think most people would prefer that because you just rip the Band-Aid off and get it over with. Seeing this prolonged, year or more long downtrend, that's what really drains people. That's what gets them. That's what makes them want to just quit and sell and get out, because it's really is draining to see every day it doesn't get better, and you can only go on for so long, and I get it. So I don't really know what to say about it. I still think everyone should have allocation to crypto in their portfolio in some way, shape, or form. I don't think crypto is going away. I don't think blockchain or Web3 is going away, but
I think you should have exposure if you want that. That speculation. I wouldn't say everyone should have exposure to crypto. Like if I was getting ready to retire, I wouldn't want any exposure to crypto in my portfolio. I wouldn't want that volatility.
Yeah, I mean, yeah,
or if I did, it'd be like a 0.5%.
Yeah, I guess it really just, it's like everything in life. It depends on the person. I think it's cool to have exposure to a moonshot, even if the moonshot is 0.01% of your portfolio.
Yeah, that's why I said. That's why I think. Yeah,
but
exactly. So I think a tiny bit of exposure would be smart.
I look at crypto as a giant moonshot. And I was only buying it in the first place because I didn't have any, and I'm young enough where I can, I have time. If my crypto does go to zero, it's not going to kill me. Right? It'll certainly suck, but it's not going to kill me. Right? I don't need that money. But we'll see. Anyway, so there's your heat map for the day. This is from Quantify Crypto. This segment is brought to you by Voyager. They're always offering free Bitcoin on their platform. So if you want some free Bitcoin, go to Voyager, create an account, use the code ZING when you sign up, fund your account with $100, make a trade, any trade. And after you do that, they will send you $50 worth of free Bitcoin into your account. And that ZING code tells them that you came from your friends at Benzinga. Hey, Aaron, I don't know if you saw this, but this morning in the pre-market prep chat, we had a pumper.
A pumper?
But we had it was a new kind of pumper.
What kind of new pumper?
They were paying us to pump their stock.
Oh, like with super chats?
They gave us almost $100.
Did you do it?
To pump the stock?
Yeah.
No.
Did you talk about the stock?
How could I not? The stock was Mullen. Mullen Automotive, MULN. The stock is it's a $1 stock. So this person basically spent it was $90. They basically spent 90 shares worth of this stock on super chat comments today to pump it in our chat. I hope it worked out for them. Like I said earlier, like I said last week or the other week, I want everyone to make money, right? I don't harbor ill will towards anyone that's, trying to make a buck in the stock market. So I hope it worked out for them. But man, there are better things in life than buying $1 stocks and hope they go to $2. To me, that's called a hope. That's what that is. That's called a hope, and a hope is not a strategy. Hope is not a plan. Anyway, I don't make a habit of buying stocks that are that low. I don't make a habit of buying stocks that are making new all-time lows. But Mullen is not making a new all-time low, but it is down like 98% or something from its all-time high. So I don't make a habit of doing that. And hey, if I'm wrong and Mullen goes to $5, and great for you, but that won't be me. I thought it was fun though. They literally spent $90 just to pump the stock, and didn't really help them at all because their stock is flat today. So anyway, I thought that was fun. What else jumps out to y'all? Hey, how's Valvoline doing? VVV, is that still ripping? Oh, no, it came in a little bit there. So if you missed earlier in the show, Valvoline was reportedly approached by Saudi Aramco for a takeover deal. Stock popped, halted, popped again, and now came back down. We have the headline right there in Benzinga Pro. So not a lot to say about that. Just a rumor at this point. This is my scanner tool. This is what I use during the day to keep an eye on the market. What's up, what's down, what's moving, what's gapping, what's spiking. Wow, what a turn in retail. Holy moly. I'm just looking at on the top left of my screen here. Hibbett Sports, Academy Sports, Abercrombie & Fitch, Children's Place, Big Lots, Signet Jewelers, I haven't looked at that one for a while. All Williams-Sonoma, all having Urban Outfitters, Overstock, all having great days. Wow, big turn for retail. Huge turn. How's Target and Walmart doing? Let's take a look-see. Oh, it's trying. It tried. As a general rule of thumb, I like buying the companies that if I decide I want to get exposure to an industry or a sector, I like, if I'm not going to buy like a broad ETF to cover it, I try to make a habit of buying the largest names or the companies with the most sales or the most revenue, just because I find that betting on the favorite usually works in stocks. Like there are studies that show that over time, just the big get bigger, and there are obviously exceptions to that rule because the stocks go up and go down, and big companies fall all the time. You can look at GE as your prime example of that. But as a general rule of thumb, the big do get bigger. And so if I were to, invest in retail and I was going to pick an individual stock, I would probably want to buy a Walmart, a Target, or a Costco as one of my picks. Speaking of Costco, they report earnings tomorrow.
Really?
Yeah. I love Costco. I don't really have opinions about too many businesses. A business is just a business. It's a place that, offers goods or services, and I give it money, and it's a fair trade. But I love Costco. I'm a Costco stan. I really am. I think it's a great place.
And I think one of the reasons Costco is such a strong company is they've long had this tenet, right, that they're going to take care of their employees, they're going to take care of their customers.
Yep.
And it keeps everyone happy, right?
I
think
love
Costco's minimum wage, like across the board, is like $20 an hour or something.
Every time I'm at Costco, I have a good experience.
Yeah.
I've never had like a bad experience at a Costco that I can think of. I mean, the free food helps. Let's be honest. The free food certainly helps.
Yeah. And I mean, there are benefits to when companies decide to lower their own minimum wage, right? There's a lot of studies that show that, with less turnover, with higher productivity, that you actually end up saving money, paying a lot of these low wage workers a little bit more than if you, just pay them as little as you're able to.
Yep. All right, so we're going to have Nic Chahine, head of Benzinga Options, join us in a few minutes and give us his take on things. In the meantime, I wanted to cover a few other things as well. I wanted to look at... Oh, wait, how's Beyond Meat doing today? Again with Beyond Meat? Oh, come on. It's up 9%? All right. No, thank you. Someone made a comment about Dillard's. Just reminder, if you're trading Dillard stock, this thing is a crazy low float, and it's liable to do all sorts of wacky shit. So it's got a float of 4 million shares. That's the float. 4 million. And highly, highly shorted. So
Spencer,
watch
how much
out.
do you know about like the 10-year break evens?
Nothing.
Okay.
Why?
As I've been seeing a lot of people on Twitter talk about it, but I don't feel comfortable enough to talk about it. But it's just essentially it's just the rate that inflation is now expected to drop is increased. I mean, the PCE is supposed to come out tomorrow, which is the personal consumption expenditure
Very good.
price index. Well, I'm looking at it on Google, so it's not like I knew from. But it's one measure of U.S. inflation. It's not the CPI, which is the core measure of inflation, but it's expected to drop 5% tomorrow, month over month. And that's what I was talking about the other day when we were talking about.
That's a demand thing. That's what that's measuring.
Yeah, and we were talking about the other day with and same with seeing. Well, I mean, well, at least talking about the inventories of companies. It's both a supply and demand thing, but with the increased supply that a lot of these retailers are having, the idea is that when you increase the supply, prices should come down. And I think a lot of the things that I'm seeing that would make me bearish on the economy, I'm hopeful that if we do see, inflation start to come down at the rate that a lot of economists are expecting, that in time that a lot of these issues will kind of be resolved and without there being some huge, 08, 09 type of recession. Or 07, 08, sorry.
I think that the Great Recession, unfortunately, because it was so bad, it broke a lot of brains. And I think I'm pretty sure we've had a recession since then. Almost positive we've had at least one recession since then.
I think the only technical recession since then was like the month of COVID.
Really? I don't know. And anyway, recessions...
Because we've had market downturns, but it's completely different than recession.
They happen. They're normal.
Well,
Actually, but before the Fed, was a thing, but before the Great Depression, the Fed had basically no authority to do anything, and we had recessions like every couple of years. But
I don't even know if the COVID was technically a recession.
I'll be honest with you guys. I'm just not really that worried about it, and I'm sorry if that makes me come off as naive, but I kind of can't help it. Like I'm young, right? Knock on wood. I have time to recover. I have time to accumulate wealth, and I recognize that not everyone is in my position. If I was 65 years old, I would definitely have anxiety right now about the next couple of years, but I don't, frankly. Time is everything. And so if we have a recession, okay, I'll just keep on buying, right? The indexes. And maybe at some point I'll start nibbling on stocks again, right? Stocks like Shopify, which again I would love to buy, but I got smoked on it a month ago.
U.S. sector ETFs are on track for their biggest monthly outflow ever.
Really?
Really?
Even like as a group?
All U.S. sector ETFs. I'm guessing they're going by like the Spider,
well,
the
they're
XLF,
going by
the XLE, the XBI. All the different sectors. The biggest outflow ever.
Even
month.
Energy?
I mean, it's included in there, but it's probably not enough to make up for all the outflows going out of the other sectors. I don't think it's saying each individual sector is seen as biggest outflows. I think just cumulatively.
In the aggregate. That's interesting.
Cumulatively.
That is interesting.
Yeah, and I'd say I'm just kind of more like, let's wait and see. I don't know. I mean, I don't.
I hear you. Night for Humanity, man. I hear you. I really do. This is why I was so down yesterday. Because I don't know how much longer we can go. I mean, people are feeling it.
Yeah.
And frankly, it's worse in other parts of the world. It's worse in Europe. 10 times worse in Europe, but it's still bad here as well.
Well, the inflation might be, but I don't know. I would have to look more at like the data on how much like spending power people in Europe have. But this is from God, you helped me say his name yesterday or 2 days ago. I forget. Carl Quintanilla.
Oh, nailed it.
Nailed it. See, I'm a quick learner. You tell me one time, I'm not going to make the same mistake twice, or at least I try not to.
Yeah.
This is the bottom quintile has less excess cash than they did in 2019. So, during COVID, probably not a great gauge just because we had those stimulus coming in, and there was actually like the most excess cash that the bottom quintile had in a very, very long time. But I mean, this is saying $96 on average for the people in the 0 to 20% percentile in terms of income is the lowest it's been since 2019, and that's to me like the bigger problem with our economy overall. Even in times when we're doing well, right? We've heard about trickle down economics for however long, but it's been proven not to work. You want middle out, economics. You want people to be spending money from the bottom out, right? And even that's why
trickle up.
Yeah, that's why guys like even Larry Fink, he got together with a bunch of billionaires and wrote a letter to Congress saying we should be taxed more, because if someone's bringing in $100 million a year, that's great, but how much money of that is going back into the U.S. economy? Someone can only spend so much on goods and services. The rest is just going into a high yield rate, investment account, and it's not actually actively participating in expanding the economy. Whereas if that money is in the hands of people that can spend it, it goes.
Right.
You have the multiplier effect.
Right.
If you study economics, that shows that when you're spending money in the economy and then it creates jobs, it has this multiplier effect, and you miss that when you have a large chunk of money in the system that is just sitting in investment accounts.
Can I tell you,
it's good for the financial sector. It's good for the banks.
Can I tell you what my barometer will be to know when I'm rich? Like we all have different gauges. I'll know I'm rich when I have 4 cars or whatever. My thing, I'll know that I've made it when I either have an advisor or like a CPA or something, and I have a guy or a girl, and their job is save me money on my taxes. Their job is do some wacky investment type stuff, and this is some crazy tax strategies. And I don't just mean when I file. I mean with my investments, some tax loss harvesting thing, and I'm like saving thousands of dollars on my taxes, on my tax bill. Then I'll know that I'm in the 1%, when I've got like a guy who I can like is going to save me money on my taxes through my investments. Some loophole. If I'm in a loophole, that's when I'll know. If I'm in a tax loophole, then I'll know I've made it. So Chris Cathie just slacked me, reminding me that this is a huge weekend for streaming. Were you aware of that fact?
No, I was not.
I've had this weekend circled on my calendar for literally months, because we have two huge shows premiering, or not premiering. Oh well, yeah, kind of premiering. One premiere, one coming back. Obi-Wan Kenobi,
Okay.
Disney Plus,
Okay.
premiering on Friday, and Stranger Things season 4.
Oh wow.
On Netflix.
Have you seen the pictures of some of the kids from Stranger Things? They look like so old now.
Can I borrow your charger? Oh, they've gotten old. Breaking news there. So I am extremely excited. I hope it rains all weekend, because I want to be inside all weekend watching shows. Been catching up on my Star Wars the past week. Extremely excited. One in the chat, if you're going to be watching one of those two shows, Obi-Wan Kenobi or Stranger Things. 2, if you're going to be watching both. 3, if you could not care less about either of them. And that's cool too. But I'm very excited. Is this the weekend that changes Netflix's fortunes? Probably not. But it's fun to think about. Yeah, exactly, Zen Bullish. When I complain about my high tax bill, then I know. Then I'll know I've made it. I just want to participate in like a crazy loophole that shouldn't be legal, but is like opportunity zones, which is like the most ridiculous thing ever. But you know,
Yeah. I just like listen. I just
I'm
listen
in
when
it,
I hear like really rich guys like that
Yeah.
explain like economically why it would make sense for them to like. It's like I know it's not out of some
well, it's just a
nefarious,
yeah.
intent. They're just saying what they think would be objectively better for the economy. They're obviously not fighting for a higher tax rate for themselves out of greed or anything like that. So
Tomorrow we got trivia. We don't have a theme yet though. Still deciding on the theme for trivia. Anyone, if you have ideas for what the theme for tomorrow's trivia should be, drop it in the chat.
and then are we not doing a show on Friday?
I think we will. I think we can do a show on Friday. We apparently Benzinga has like a half day on Friday, which
I'm trying to
we
figure
didn't know
out.
about.
So I got propositioned.
Whoa, Aaron.
What
Keep it PG
is that a?
for the kids.
Okay, a company proposed, gave me a proposition to fly up. Why are you shaking your head?
Just keep going.
To they're opening.
AB on the street, more like AB on the street corner. Hey-oh! All right.
I obviously there's some like a meaning behind this word that I don't know that everyone else seems to know. This company offered me, they want to fly me up to this facility where they're opening and having a grand opening. It's going to be like a fun celebration. They're having an MC. There's going to be some big people. It's up in Canada in this like remote town in British Columbia.
Wait, that's way out west.
Yeah, so they'd fly me.
Wait, you said Toronto? Didn't you say Toronto?
No, Vancouver. Wait.
Oh.
How far is that flight?
Far, man. Vancouver?
Really? That might be my deciding factor.
Dude, that's like a 4. We just flew to Vegas.
I just know that we're close to.
We just flew to Vegas. It was a 4-hour flight to Vegas.
Oh,
Vancouver is further.
God. It's I think it's a 6-hour. All right. Oh no, 4 hours 26 minutes for a direct flight. I in my not smart brain just thought like, oh, Canada's literally right there. Like I can see Canada from this window, so I thought Vancouver would be close, but apparently
that's true. We can see Canada from our office, which is very cool, I think.
it is very cool. So I thought we were like close, but either way, this company offered to fly me into Vancouver. And then where the actual facility is, where the grand opening is, it's like a 2.5 hour drive from Vancouver.
Dude, are you kidding me?
But there's a helicopter ride, and they're like offering the helicopter. I've never been in a helicopter, and that's like the part where I was like, oh, I don't know. I don't know if I'm gonna do that. Like that seems pretty sketchy.
I've also never been in a helicopter.
But now that I'm learning how long the flight is to Vancouver, that might be the kind of deciding factor.
Oh man, That's far, bro.
I know, for like one night, and that's also like not that big of a deal. Like if it was like a huge like news story, I'd want to go cover it, but they're just opening a facility, and like I can get quotes and write about it either way.
No, yeah, no thanks. All right, what else? Go for the air miles. Yeah, that's something else you could do. I don't know. We kind of like as we discussed already. We were like very like distracted throughout the morning here. So Aaron and I didn't do a ton of prep for this show, just to be transparent with you guys. So if there's anything you guys want to talk about.
Well, I also want to talk about Snap bouncing back today.
Snapchat?
Yeah.
Do you think Snapchat is a zero?
No.
Do you think Snapchat is ever going back to its all-time high?
What, like $80?
Do you think Snapchat ever gets back to $80? Because I don't.
I would have to. Here's the thing: is I think
I don't.
I think the whole social media landscape is kind of like due for a reckoning. I think eventually, over time, people like realize more and more how social media. I mean, social media is like anything else. There's benefits, there's drawbacks, but I think in large part for having young people, the effects of being on social media all the time for a lot of young people has more negative effects than it does positive, and I think over time that won't bode well for a lot of the social media companies. I don't know. I mean, I would have to know whether or not like young people continue to use Snapchat at the rate they're using it now. Because if the answer is yes, then yeah, I think Snapchat will be fine. If the answer is no, that less and less people are going to, if like we saw Facebook for the first time have less users than they did them. Like if we start seeing that with Snapchat, then obviously I don't think it's ever going to do well. I still don't know if it's a zero in that case, but yeah, I don't know. I mean, at some point, what's Snapchat's market cap right now? 22 billion. Snapchat could be a takeover target at some point.
Well, that's kind of what I think, honestly. I think it's never going back to 80. It's not a zero, but I can easily see a scenario where it just languishes in like the teens and 20s, like for forever. Just anecdotally, I mean, do you and your friends use Snapchat like you used to? Because I don't.
I wouldn't say like we used to. Like I definitely used to be more active on Snapchat. I'm in a few groups where like we'll send each other like videos, snaps, whatever, just like for fun. And like I'll say anecdotally, those definitely used to be more active. But I'm also 25 now, and I think just like as you get older, people use Snapchat less. Whereas like I know I've talked about this on the show before, but meeting like my last job before this, so I was working at a golf course, like. Kid gets a job. He's like 18. He's like, oh, let me get your Snapchat in case I ever have to like ask you to cover a shift. Man. I'm like, just get my number.
I don't
what are you
know,
talking
man.
about? Like, that's like his primary use of like communication.
Every young person I know, I've come in contact with in the last few, even like look, talk to the Benzinga interns. Does any Benzinga intern? Maybe we should do a survey. I don't think the Benzinga interns use Snapchat at all.
I guarantee they use it more than we do.
Really?
I'd bet. Yeah.
Do we have any interns here right now?
Aiden Harris is somewhere.
Intern Aiden, are you around?
It's probably over there.
I wonder if any of them use Snapchat versus TikTok. I don't see any interns here either. Oh, it's hard to. We can't see the whole office from here, but all right. If any of them do come over, intern Giannis. I can't see him from here though, so whatever.
Yeah, I mean TikTok is obviously the big thing.
Okay, and then Julie brings up a good point about Twitter. I think Elon Musk is not buying Twitter.
I've said that since day one.
I know, but I disagreed with you, and now I'm agreeing with you.
Okay. I know. I said from like day one, like he's gonna find some reason why he can't do it. I think Elon just loves being in the spotlight, loves being talked about, and so when he offered to buy Twitter and everyone was talking about it for a week, he absolutely loved that. But then when it came down to like, oh, this actually isn't a great business deal, even if it goes through, here are all the headaches you're gonna have, and basically every single person with knowledge that had like former people that had worked on like Facebook's legal team, all the different sites, they're like, it's not as simple as Elon's making it out to be. Like you can't there's a reason essentially why these different social media companies like have content moderation and whatever, and it's because it's from a business standpoint, it's obviously more popular to not put yourself in a position where you're gonna have people say, "Oh my God, look, they're censoring that or censoring that," and it becomes like a political issue. So, I think there are a lot of legal ramifications that Elon has now been made aware of. On top of the fact that, and he couldn't have foresaw the. Well, actually, I mean, some people did. Just the big tech drawdown in from when he offered to buy it. So he's offering to buy a company that's worth a lot less than he offered to pay for it, and he doesn't like that.
No. All right, let's bring on our next guest, Nic Chahine, a.k.a. Nick the Troublemaker, a.k.a. Head of Options at Benzinga, joining us live on Benzinga Live. What up?
Wow, that's a fancy intro. I like it. Can
Only
you make
for
me
you.
one?
I can ask someone to make you one, but I myself cannot make you one. No.
No. Okay.
I can ask someone to make you one. I can delegate to one of our editors who can make you one. Yeah, I can certainly do that. Done. Consider it done, Nick. Consider it done.
That's awesome. It was great meeting you in person, both of you. So
yes, we didn't really get a chance to talk too much, which I was kind of bummed about. But
we walked by in the hallway, high five on the wall.
I know, but you were like kind of locked in the one, and I was locked in the other room, and you were locked in the other room, and it was difficult to. I don't mean like actually locked in, but like more like metaphorically locked in.
We were busy.
We were busy. That's a better word. Busy. Well, I hope you enjoyed the conference, man. And it seemed like we got some pretty rave reviews.
It was a blast. I got to meet some pretty smart people. I got to meet a couple of experts from Benzinga that I didn't know before. I got to meet the team. I've been working with you guys for like 12 years, maybe. And
I know.
I haven't met any.
I know. I was commenting that as well. I was like, damn, I've been emailing Nick since like 2015, and I never actually met the guy. So
it's pretty fun. And now this is making the live room even more fun because I know some of the people like in person. So it was cool. And I also did a class from inside there, and there were some people just sitting around the table and over my laptop watching. So it was a good experience. I would do it again at the drop of a hat.
Just maybe not Vegas this time, right? Like somewhere else.
Since I didn't leave the hotel, yeah, I'm not partial to Vegas. I don't want to upset Vegas people, but I don't smoke, I don't gamble, I don't drink, so it's definitely not friendly.
Yeah, okay. Maybe like Miami or something next time.
How about California?
Or California. I mean,
I don't have to travel to Miami.
Yeah. All right, we could do. Hey, I've never been to LA.
Make it happen.
Bree, I've never been to LA. You want to do LA? I've never been there before.
I lived in LA for a brief moment.
All right. Anyway, let's go to the markets here, Nick. Walk us through what you've been seeing out there the last couple of days, the last couple of weeks, and how you've been approaching things.
We've been the word of the month is tactical. You don't want to get married to anything unless you have a specific reason to. For example, if you saw Upstart collapse and you like that company and it collapsed on good news. That was one tiny stretch of a concern that maybe you pounce. But otherwise, in and out. Like for today, I was like, okay, what can we do? Midterm. Intraday, we're nailing it. We're having a lot of good runs intraday because we do well with the charts. So in the live room, we've caught a few runs every day. Yesterday, I remember two specific ones that even I was able to catch because I'm busy doing the coordination. A couple of runs in the S&P up. And a couple of shorts on something else. I think a couple of people were short AbbVie from the beginning, and they made some money. Maybe that was Monday. I don't know. But good intraday runs are easy. The headline slap in the face is what gets you. Like if you were long Twitter, for example, and Snap out of the blue. Went long Snap yesterday. I had been long Snap before. I shared a long in Snap before. Why do they do that? Why did they pre-announce? What's the point?
I actually don't mind it. I think like
I have mixed feelings.
I think seeing a CEO get out in front of it, like it's.
So they just reported in front of what? They just reported earnings.
All right. So Nick. So here's the other side of that is you end up with like a Walmart situation where there was virtually no indication at all that was going to be a total shit show, and it was a total shit show. So
what's the point of blindsiding your investors? If I was an investor, I'm ready for it to be blindsided in the earnings. I protect myself. He came out and slapped me in the face, didn't give me the chance to protect myself. If
Okay,
I'm ready,
I
for
hear
the
that.
earnings,
I hear that. I
Yeah.
hear that.
And plus, he just reported earnings.
I know.
What the fuck
I know.
happened between then and now?
4 weeks ago. Okay, I get it. I get it. So what you're saying
In
is,
4 weeks, the business fell apart.
But,
What kind of company is that?
I know. Okay. His point is, at least with earnings, he knows it's coming, and he can prepare because it's on the calendar.
Right.
But people and Nick, I skimmed the transcript of the I think it was the Walmart or the Target earnings call, and the analysts, as if anyone really cares, but like they were furious because their estimates were way off because because no one had any idea that it was going to be as bad as it was. The company just was like silence, and then boom, dropped the head.
They need to eliminate estimates. I think Warren Buffett said it like 10, 15 years ago.
Yeah.
But you should eliminate that system of giving estimates. Let people do their homework, deliver the reports, make up your own mind.
Yeah, well, okay, so that's a whole other thing. But I hear your point about at least with the earnings, at least it's on the schedule. But also, I admire Snapchat really trying to be upfront about it. And
Okay,
right? I mean,
but what about they said? If I read the headline completely from you, by the way, I searched it. I was like, Benzinga. Okay, so if I read the headline, did it say? He said below the low end of the estimates, which was 20% growth.
Well, the EBITDA estimate was flat. It was a $0 to $50 million.
The way I read it, I thought he said growth is going to be below the low end of the estimate. Well, that was 20%. It said 20 to 25% before. So below by a point or below to zero. Give us a clue. If you know the number is going to be below, can you give us an idea, like really below, like we're going to shrink like Netflix? So here's my warning. My warning is how bad is it that he had to jump the gun this far out? And if they come out with the earnings, it could be violent either way. I don't think it stays calm. So if you made money off of it, I would get out. And because I don't want to be blindsided again. What if it's actually a negative number? What if they didn't grow? What if they shrank? Shrunk. Shrank.
All right, can you share your screen, Nick, and we can look at your charts and see what you're looking at? And as a reminder, everyone, we do have the release of Fed minutes at 2:00. You know that we don't care really, but some people will care. Some people will care about that.
Those are past events.
Yes, I know, but some people care about that stuff, Nick. So
I can't remember where my screen is. Hold on.
Some people really care.
Okay, there we go.
There we go.
All right. So this is, I lost you now. Now, where are you? Oh, StreamYard, let me get you out of here. Okay. There we go. All right. So I was looking at SE. I was answering a question.
Yeah.
And today the debate was about dealing with some trepidation. Like, what do you do? This person was asking, they were buried in a trade in a good stock, SE, but at a higher point, how do I defend it? Well, it's too late to defend it. So we shared some ideas there. But the SPX, here's the big picture that I've been seeing. So once we lost the 225, the flash crash from the Ukraine, 3,600 became the target to my eye, and I shared it. And we lost the neckline. So now the bulls can have rallies, but you have to put yourself in the mindset that you have to expect the rallies will be sold. Therefore, you should be expecting to book profits fast, to get out when you get a rally. For example, this morning the IWM popped from a red position. So if you had calls and you got a rally and the calls got better from red to even or even-ish, I would use it to get out. So use the rallies to think out until you're proven differently. So I think the SPX could get to 4,200, 4,225, 4,210-ish. It has a lot of resistance, but I think it's going to be sold off. The trick is how deep we go now. Do we start establishing higher lows? Lower highs is fine. Higher lows is necessary to kind of like go sideways to snap out of this descending channel that we see. This is just a daily chart. Now, on the 5-minute chart, you can get to information to trading today. Like if I wasn't on your show, I would have said to short the S&P up here, buy puts, and then this would be the target of it, because that was kind of like the base from which they got that last jaunt. Now, I would buy this dip with a stop, because comes out to here, take this out, it could get to 4,000 today. Lose this, it gets back to the second base, which was somewhere around here. So these are tactical intraday setups that are available. I have 260 people right now in the room watching my screen, wondering what the hell is going on because they can't hear me. But they're there, and that's what we're doing all day. In between that, we're discussing other things. Like yesterday, somebody was stuck in a snap scenario that I had set up to sell a put spread at 22.20. And completely in the money now. Luckily, there's time on the clock. So I said what I would do with it. So yesterday, the scenario would be to sell the protective put, accept the shares if I get assigned, and then the break-even point would be $15 per share, and I'll deal with that if I end up having to be holding the bag at that level. So there are very fruitful discussions going on. I also discussed Microsoft today. What do I do in this boring market? Boring meaning I don't have commitment. Rallies are being sold. The bears don't have enough gumption to take us down to zero, which they have all the tailwinds they want, and they haven't been pressing the sell button. So we'll see. What time are the minutes today? In 40 minutes or so?
Yeah, 2 o'clock. 2 o'clock.
So we're tactical. We're trading the intraday action. I'm hesitant to give long-term commitments. I'm finding some oversold stocks like Facebook. I traded it bullish twice and played out well twice. Shorted the dollar. That played out 130% so far. I say so far because I booked enough to where the leftover that left on the table are free. So I'll hold the puts. They have, I think, 50 days on the clock or something. What else? I haven't dealt with volatility. So the VXX, there's something broken. I usually watch it intraday, and it's very reliable. And every day it's doing something weird. Yesterday, sometime middle of the day, maybe this candle, maybe this one, it fell with the S&P. Like the S&P, we had a big red candle. The VXX fell with it, and that shouldn't happen. The VIX spiked. So this is disconnected. Something is going on in the back of the house of this guy to where shenanigans going on. So be careful. The VIX is telling more truth than this one. So be careful using the VXX. What else are we doing? Trying to find cheap plays like SoFi finally maybe catching a bid.
I'll believe it when I see it.
That's a disappointment. Every time it catches a bid, it gets sold off. But therein lies a thesis. So the small caps, IWM, RUT, whatever ticker or index, the index is the RUT. That's the Russell 2000. Topped and corrected first and dropped to, in fact, it is at its pre-pandemic level already first. Now the S&P and the Qs are still about 20% above theirs, I think 15 to 20%. But these guys bottomed. So from that perspective, will they turn around? And they will turn around on the backs of everything that ARKs usually like, ARK Invest, SoFi, Clover, even Shopify, PayPal, Square. If you start seeing strength in those, and we did in the last 2 weeks, we had red days in the market when these stocks, supposedly crap stocks, were getting bid. When that happens consistently, then maybe the small caps are ready to turn. So you start looking for clues. I will start looking for clues. I'm stuck in this downward spiral. Let's take the earning. So where are the hints? Oh, this might bring a lot of lines. Yeah. So ignore the lines in between. When do I get out of this descending channel? Clues will be when you take out major prior fails. Like what about this guy? Look, great support. Market 182 on the IWM. So what is that? 1820 on the RUT. We'll go see.
That looks like a huge. That looks like a head and shoulders to me. I mean,
up here. So you got heads and shoulders everywhere. So which one do you honor? Right? There's one up here. There's one. Every neckline.
Yeah. There's one down there. Yeah. Right. Yeah.
This one, yes. Yeah. But I would think you say head and shoulder, I say support until it fails, right? So I have support, support, support. Support lost, out. Let me see what my note says. IWM losing 512 support. Long with tight stops. So from a trader's perspective, it's a 2-hour chart. I would get long with a tight stop because I would assume something. And if the assumption is wrong, I will stop myself out. And then I look left. Where can it go below that? Ooh, little gap right there. So 165 closes the gap. So I should mark it while I'm here. So you have to stay tactical like that. And I'm taking clues from the small caps. I'm worried about the Qs tonight. NVIDIA reports. So if it does well, not it does well. If the stock reacts well, we know it's going to report a decent report. If it reacts well, then it might give some levitation to the QQQ because it's going to infect the SMH, the XLK. So the Qs will have at least some upside lift and no drag. I will look close to the close of day to see if I can get clues from the options. Believe it or not, I've nailed almost every guess I've made in the last, 3 weeks by looking at the options, which is, wait. I remember now what we did yesterday. And this week, every day, I would look at the open interest. And so the SPX, in case you missed it, the SPX now has expirations on Tuesday, and I think Thursday as well. So basically every day. So yesterday, we caught a run in the SPX late in the day here. That was solely based on me looking at the open interest, and I said there's upside pressure. They're going to get to 39.45. So I would buy a call there or a call spread, 39.45, 39.50, whatever. It's not a science. So you spend $1 to make 4 and wait with expiration within like an hour. And somebody in the chat room, I took a snapshot, but I didn't bring it with me. Paid $2.20 for a call. They closed it for $10.10. So if they did one, they spent $200 and they ended up with 1,000, basically. And I don't know how many contracts they did. But and then I said exit quickly because there's downside pressure. They need it to be like a little bit lower. And sure enough, we dropped as soon as we got there. So I was long with that one too. We also bought the dip. Same logic. I said you buy the dip into support on the gap fill, and then you stop out if it doesn't work. And it did work. So tactically, that's easy. The overnight stuff, you get the blind side from Snapchat, taking down the whole market. How ridiculous is that?
It was pretty wild.
It reminded everybody of the risk that looms, which is the Fed is criminal at this point. They are out to control inflation at the expense of demolishing the economy. Last night, I went to the movies, by the way. First time in umpteen years.
What'd you see?
I went and saw a preview of IMAX Top Gun.
Oh, was it good? Shoot,
awesome.
I forgot that's
awesome.
out.
People were clapping. It was really cool.
That's a movie that you got to see on a big screen, right?
Yes, and it was IMAX. So it was like a really big screen.
Maybe I'll go this weekend.
It was. I recommend it. I mean, it was well done. The effects felt real. Nobody had any complaints. But the point is, one of the guys we were with is in the business of doing real estate developments on a big scale.
Yeah,
and they are dying. They have a dozen deals in the works, big money deals. They're all about to fall apart.
Nobody wants to pull. Nobody wants to pull the trigger.
Well, the interest rates jumped. It changed the game. So what happens? It trickles downhill.
Yep.
So they are like freaked out with controlling inflation. They either see something we don't, or they're just stupid. Because if you ask me, I would be willing to pay $6 for milk at Costco instead of $4.25, which is the difference, rather than demolish the economy just so you can drop my milk $2.
Right.
So we don't have hyperinflation. We just have inflation.
Yes.
And that will burn off. They're going out there to destroy it. My gut says that they're going to soften their tone. They already started. I've already heard a couple people saying maybe we'll stop after a couple. So if he starts hinting, Powell, that he will step back and watch data, all he has to say, we're watching the data. Last time he said we're not watching the data. Speaking of Head and Shoulders, stop out if we lose 39.35. Because that might make
wait a minute, Nick. Did you go to the screening because you're in AMC's Investor Connect program?
Did I do what?
AMC offers advanced screenings to people in their Investor Connect program. Is that how you got into the screening?
Oh yeah, no.
No, it's okay. You can tell us. It's okay.
No, I don't think it was an AMC theater. AMC theater.
All right, okay.
I don't know who.
It's okay.
I don't know. I have to look it up. But I got invited.
Okay.
I would not make plans to leave the house in the middle of the week. I wake up at 3:10.
Yeah, no, you're
so it's not something I want to do voluntarily. Yeah. But it was fun. I'm glad. I'm glad the weekend is below it. I'm glad that they got me out of the house. It was a good movie. I recommend it. But be tactical. I think there's still a chance we make an all-time high this year. I think there's a chance he's going to have to cut rates by the end of the year or early next year if he continues this belligerent. So nobody knows anything, and that's why the VIX is 30. Nobody knows anything for sure, but that's why the VIX is 30. I don't think the rate hikes are going to control inflation.
We'll see. I mean, I hope you're wrong because that's the goal here. So we'll see how that plays out. Anyone have any tickers for Nick? We got a few more minutes with him, and then we'll let him hop. But if you have a ticker you want Nick to pull up on his chart, drop it in the chat, and we can do that in the next few minutes. But so far, my biggest takeaway from this was being tactical with your trades, and also Top Gun was good.
And stop losses and stop gains. So if you get in and you get fast money, book it. If you get in and something runs against you, catch it early before you get blown out.
All right. What about Dexcom, DXCM? Not a stock I look at very often.
Is that a micro cap?
No.
I've got lines. Apparently, I've reviewed it for somebody. I don't remember anything. Let me zoom out to a weekly to see what's going on. Okay, so this is a weekly chart. Clearly has lost all support. This, that, and this has fallen into what should be support, the zone. Anything below 290, let's round 300 into 222. Big range support, kind of like where Amazon is now. It fell into support, but the support zone is so wide because of the pandemic. So I wouldn't add if I'm long stuck. If I wanted to nibble long, I'm catching a falling knife. Not the right time to do that. The P&L looks good. So unless there's something hidden in the quarterly that I'm not seeing on the yearly, there's nothing urgent there. But the problem, support is so old that it's not effective and it's not a hard line in the sand. If I were to pick a value, 250 would be a good place to start. Now, some people cannot wait, so they want to get engaged right away. Why not take partial position? That's another thing that people should start doing. How cocky are we to say, this is it, I'm all in? You should just take a little bite and don't average down, average in. So if you buy your full allotment now and then the stock price drops and then you add, you just made your problem bigger for no reason whatsoever. So I would average into a full-size position. Like I did that with crypto. I knew that crypto was falling. I did the forecast in November, 3 steps. I said I will nibble at 33, and then it bounced. And then I said I would nibble again at 25, and it happened, and I added. But if it falls to 20, which is my ultimate goal, I would be fine because I would add the rest. So I didn't average down. I'm not planning on averaging down. I planned on averaging in. I knew I wasn't catching a bottom, but I wanted to be engaged in case it goes ballistic. And then I'll get to a full position.
Couple more. What about Starbucks? This has been a train wreck.
Starbucks, I believe, fell into the pandemic levels, right?
Yeah, it's been a disaster.
So this is the pandemic debacle for Starbucks.
Oh,
this is pre-pandemic. So this is like the most logical stock from the world wasn't so great. before the pandemic, and it wasn't an all-time high, which made sense. Everything else was an all-time high. And then it fell apart because the world stopped working. That's normal. And then it recovered, but not everything. That's also normal. What the markets did was abnormal. And then it finally said, hey, everybody's crazy. I'll go crazy too. And now it gave up all the crazy. So if I'm long here, if I'm starting long here for a long-term investment, I'm not making a mistake. But if I go all in, I might be. So if I wanted to buy 100 shares, I would take half. If I wanted to buy calls, I wouldn't, because the VIX is so high. Everything is priced almost 40% too expensive because the VIX is high. Wait for the VIX to drop. Meanwhile, what you do is debit call spreads. That eliminates the high VIX effect. You buy something expensive, you sell something expensive, you create an opportunity without overpaying for it. So selling a put to own shares would be great. Selling a put spread would also be good. Avoid the earnings. They just reported. That's good. Expect sellers into 77, heavier sellers into 82. If you clear 82, 83, you'll fill the gap. So I like it. I'm going to add it. Is it on my list? Why is it not on my list?
Don't know.
I'm going to add it to my list. Add Starbucks to watch list. Which one? This one. There. This one is not ready. Zoom, Starbucks, they're both in the same category. SoFi, I'm already long. CME, it looks good. If you're looking to trade Bitcoin, you can nibble on BITO knowing that it's going to go lower. CME looks good. Similar scenario to Starbucks. Technically should have a rebound that's big, like 207, 208, maybe 209. But don't know when it's going to happen. Stop out if you lose the floor because you don't know where it's going to go. Fundamentally is boring. That's the point. So barring any...
Have you ever heard of the term ghetto spreading? From so many beats.
What?
I've never... He's legging in and out of options. I guess is referred to as... I've never heard that before.
Riding what?
Legging in and out of options.
Ghetto spreading. That is a horrible name.
Like going one at a time.
So what's wrong with saying legging in and out?
I don't know. I've never heard of that term before. Just now.
It's like using, it's a
about.
poor man's covered call as opposed to calling it a calendar. Poor man covered call.
Oh man.
He's saying just instead of putting out like an actual spread from the get-go, if you just buy...
Yeah, we do that all the time.
Yeah.
Yeah.
But why does it need to be called ghetto spreading? Is my
It's not an actual spread, but it's like I think a better word would be like a makeshift spread, because it's not an actual. You're not buying a credit or debit spread, but you effectively.
That's called locking your profits. So here's what happened with the Verizon.
Right.
On May 3rd or 4th, I said go long Verizon because it pays dividends and it's a good stock and it's fallen into pandemic bottom. No buyers. What's the deal with this drop on no news? So I said, get long. And then this happened. So one of the ways to get long was to buy a call, and it cost $1.27 at the time.
Yeah.
The person I spoke to yesterday or the day before yesterday about this special ghetto thing, they said, what do I do with them? I'm up. It was $260 now, and he paid $140. Or $360. So he clearly more than, he made plenty of money there, more than double his money. So what does he do with it? I said, you can close some, close all, and walk away, say high five, or lock profits by by selling a call above it. So basically creating a debit call spread after the fact. And in fact, you would create it by having a credit because you paid $1.40 to open. Now you can sell one above it that is more than $1.40. So you sell for $1.60. So now you have a credit to own an asset that still appreciates with time. So if that's what you mean, I'm all for it.
All right. Nic Chahine is the head of Benzinga Options. I'm going to drop a few links in the chat that give you that will get you more Nick in your life if you want. You can
the room is live. The room is open right now. They are asking, is he on mute? Is he on mute? What's he doing? So
ready. Here's what I'm gonna do. I did this the other day as well, but I'll do it again right now. You can go to benzinga.com. I'll even share my screen. You go to benzinga.com.
Wait, go follow me on social media too.
@RacerNick.
Yes.
NIC.
Okay.
No K. You go to Benzinga.com, the top right hand corner, it's in orange, or if red if you're colorblind, or yellow or green if you're colorblind too. Premium is what it says there. Top right, click on premium. Takes you to a whole new page that I will then show you. And within that page, you scroll down all the way to where it says, wait. You can't see what I'm seeing. Now you can. You scroll down. All the way where it says right there, Benzinga options with Nic Chahine. Sign up today. Check it out.
Sign up for the one that gets you into the chat room. That is where the deal is unbelievable. I'm sharing my screen all day, every day. We can do this all day, every day. The conversations are fun. People are sharing their trades, not just mine, and they're unbelievable traders. So it's a lot of fun.
All right, Nic Chahine.
Nick, always good to get you
Always
on.
a pleasure.
Thank you for the invite. I appreciate it.
All righty. Let's bring on our final guest of the day. It's been a minute since we caught up, I feel like, because last week we had, boot camp? The week before that we had, I think he was sick, or I don't know. It's been a while. But Jesse Kaylor from Elite Trading
Hell yeah.
joins us most Wednesdays. And this Wednesday is no exception. So let's get him on the show. Jesse, what's up, man?
Hey, what's up, guys? How are we?
We're okay. We're okay. How we doing?
You know, living the trader dream with all.
How's the foot, man? How's your foot? Is it? Are we all good on that front? Oh gosh.
I'm not able to no, I'm not going to show you. No, I'm not able to do any right angle cutting or any running back moves right now, but I can walk on it. It's fine.
We can walk. Okay, and we can trade on it too. That's the.
We can trade on it. I can trade on it. I don't sit on it while I trade or anything, but
that's good. That's good. All right. Let's just start high level here. What have you been trading this week today?
Today I've been really just kind of chilling. I took a little dip into Twilio, but that's more of a TWLO. That's was a buy on the part of, I just felt like I wanted to own it at these levels a while back, and they got down to further than I thought, and I put another order in down at 68 for a like a never close order. It's open until it actually executes. So other than that,
And then Jesse, let's get your screen pulled up real quick.
yeah, sure. Oh yeah, I got to do the share. Sorry, I wasn't prepared yet. Got it.
You going down to Indiana for the Indianapolis for the Indy 500?
No, not my cup of tea.
Yeah.
I've been to a couple. I've had some like VIP experiences at like NASCAR races and things like that, or NASCAR truck series, things of that nature. And it's just you got to wear the earbud. I went the first time without any earbuds, and then I went the next time with some ear protection. And I mean, that's just That's all. I mean, that's all it is to me. It's just a bunch of noise in a circle. But
Yeah, I'm not a huge fan of like watching the stuff on TV, but I feel like I would enjoy it more at the actual race. And after the Indy 500, the Indy Series is coming up here to Detroit the next weekend. And I think I am going to go to that for my first like in-person race experience.
Let some natural light in here or something. I feel like you guys can't see me. I don't know.
Well, we care about your charts, not you anyway.
I'm pretty. They got to see the pretty. No, I'm just kidding. I'm just looking at yours and I see how much cleaner you look. I'm like, man. But yeah, we're just looking at, got a nice little trade here on Twilio. For a target. This was just something I just set up for you guys right before I came on, just to kind of show you the mindset of a short-term position on this. But for a longer term, it's been so beaten up, and it's just at the point where, I mean, look at that. So funny how minute that trade is on a 15-minute scale when you bring it back like this. But see how it's coming to the support level, previous levels here. I would say if we were to get a market turnaround, we get some bouncing on some of these names that we could possibly get a run in this one, TWLO. And, if you put a stop in, you're looking at $15, $20 in risk. So you may want to wait till it gets down to that 68 level or 87 in that area, maybe a little closer to those ranges that I was looking at before from this previous dip. But might have just jumped the gun a little bit. One of those moves where I haven't been trading a lot when it comes to, or haven't been investing a lot or buying anything for the long term. It's all been just quick in and out moves and tight stop losses, getting stopped out a lot. The only thing that's been profitable for me lately has been what we talked about last time we were on, was selling some out of the money calls on some of these stocks that weren't going to be playing or having any earnings recently, things of that nature. Buying some puts on some of these names that we weren't completely right on one or two of them, but I know the market was right if you picked about 10 stocks and bought some puts over the last week, that you did good. So
yeah, and Twilio is one of those names that I actually really like down here as well. I think there's a lot of names in the tech space that have just gotten absolutely crushed. Like if you look at Twilio down 70-80% or whatever, that could be setting up for longs.
yeah, and that was one of the best options trades I ever had by a luck chance. A guy that I ran into when I was at a car dealership said he saw me looking at some stocks, and he said, "Hey, it was just out of nowhere. He's like, "Are you looking at, what are you looking at there?" kind of thing. And then it went to as he was walking in to sign up for his car, he goes, "Twilio," and just whispers it back to me, and I was like, "Huh?" And he goes, bet on it. So I bought a couple options overnight, and it went up from like 80 to 120 overnight. And I had like 800% gains on some Twilio calls. So that's like my fun story that I love about them anyway. So that's the only reason why they were on my radar ever to begin with. But then I got involved with what, their technology, and they're kind of like a CRM, like CRM, right? In a sense, they're in that same space, the cloud space. Yes, ma'am.
Sounds like your dad duties are calling.
Yeah, she's okay. She had to stay home and work with me today because she was sick, so she didn't get to go to Mammoth's today.
She hitting any good trades?
She is not hitting any good trades. So your Roblox is a bust.
Yeah.
I have Roblox on my tabby a lot.
You have Roblox on your tabby a lot?
Yeah. I have me.
Disney, that's one that's the kids' stocks that everyone wants to watch, but for some reason nobody wants to buy their stock.
Yeah, I mean, we're now like well below where we were on Disney pre-COVID. I mean, if you look at before the COVID crash, Disney was trading around $140 a share, and now we're down to $100 a share, and that's with Disney Plus growing all throughout COVID. So I don't know what it is. I mean, and some of the numbers on Disney kind of look off. Like you look at the PE, and it's 70, which looks crazy high, but a lot of that is from the who'd they acquire? Fox, the Fox Studios, Fox 21 Studios or whatever. So the forward PE for Disney is actually a lot lower. It's a lot better looking than what its actual PE is right now.
Yeah. And then, looking at, I just pulled up the MGM. Like, I'm like, are casinos and are they just going to never come back, ever? Is that the case? That when you're looking at these things, it's like almost every stock of every company that I was trading for the last 2 to 3 years looks like this. They all are just.
Yeah, I think the gambling ones are interesting right now because actually, if we do head into a recession, gambling is one of those industries along like all the vices tend to actually like hold up because, I mean, let's face it, like when we're in a recessionary time, like things aren't that great.
People go drinking and gambling and become degenerates, is what you're saying, Aaron.
That's exactly what I'm saying. I was trying to say it more eloquently than that, but that is exactly right. But I think more so than that, you have the factor that like I think the investors are realizing there are just so many of these companies that are doing this that they're spending just so much money on marketing, advertising, and not really bringing in any revenue.
Spending tons of money on marketing. I mean, DraftKings is everywhere. But the ones that you don't hear about are like BY or Boyd Gaming. So like if you go to BYD, that's one that they're like the thing behind the thing, as Raznick would say, I believe. They're not the ones that are in your face talking about what they do, but they're highly involved in the gambling, industry. So they're just not one that I hear a lot from people. A lot of people talk about the DraftKings and the Penn National Gaming and things like that. But this is one that's in that sector that could be a watch in the long term as well.
Yeah.
Horses are still racing down by me at Belterra Park.
Really?
Yeah, they're racing. They got huge crowd down there the last time I was down there. I mean, it was packed.
I don't understand. On my like DraftKings app, I can't even bet on sports racing up here or on horse racing.
I'm one of the in-person kind of guys. Like if I bet at like a sports book, I'll go to the casino in Indiana, like Lawrenceburg, and you can actually go to like they have like the bar there. You can get drinks and hang out and like bet right on the machine right there.
Yeah.
Same with the horse races down here. What? You can't what? Oh, okay. We'll find it. She's missing a shoe for her baby. I found a toilet.
All right. Well, if you need to hop for a second, I can always take over and then.
No, she's good. This is the 4-year-old. The 2-year-old is the one that I have to hop for because she will just start screaming, and that's the one we have to worry about. The 4-year-old, she's got it covered. She likes to hide in the background and hope people can't see her, but she wants to just listen. But no, we're good. What have you been trading, Aaron? Have you taken any shots on any options that you haven't talked about today or that I don't know about that
Let's see. I bought some QQQ calls yesterday, like morning while we were down a bunch, and I actually did real well on them. Was up like 80% at one point, but I was kind of they were ones that expire today, and I was holding on to them in case we got some like crazy rally. But I had a stop loss on them, and I got stopped out earlier when the Qs kind of sold off. So I still made about a 20% profit, but they were up about like 60% at one point, and I was aiming for a little bit more than just a little bit more than 20%.
Well, no.
Outside of that, I mean, I'm bearish Tesla here still. I don't really have any active trades on it right now just because I mean the options contracts are just still insanely expensive, but I think if we have like a few more days where if it gets back up to that $700 level, I'll probably try to short it down a little bit. I think talking about like Snapchat, I was talking about this yesterday. Snapchat, the market is just so reactive that we got that confirmation from their CEO Evan Spiegel that the company really hasn't been doing well and it's not really in a great position. But I think a lot of people could have told you that, just that Snapchat like isn't really doing well. And so like in my mind, it's like, why wasn't this already down there if everyone knew like Snapchat's struggling, they don't have a good time, they don't have a good way of monetizing their user base. You're not going to see the rapid growth that you saw during COVID. So
yeah, I mean that one to me was always a shocker because I feel like I was very scared to trade a lot of these or buy or invest in a lot of these stocks that were being given out for free on Webull and for people signing up for accounts. Like it just, I don't know why, but it gave me like just like if they're buying them and giving them out for free, people are owning these.
That means the supply is pretty high, right?
Yeah, I just feel like it was just something that was like it just didn't seem like a concept that was going to be winning for a company, for a stock company and then all of a sudden it went for like $50. Like it went crazy. I remember. And then ever since then, I was actually short it mindedly, but just don't really trade it. I have a couple times and I think I actually lost a couple options trades on it, but it's been one that I just kind of stayed away from. I wish I would have had a little more conviction when it was up there in those upper 40s and 50s and said, let's just buy some long-term puts. But there's some winners. I'm sure there were some winners that were shorting this thing that woke up real happy.
In Snap, yeah, I'm sure. Let me try to find and so basically, I mean, sorry, give me 1 second from the.
I see Easy Mike and they were talking about like options and open interest and things of that nature. It's kind of something I was I could touch base on too, because it's something that I've been really focusing on a lot of times when I'm getting entering a trade or getting out of a trade, either whether it's shares or if I'm buying common stock or if I'm buying the options or selling them, because these levels are opinions is the way that I think of it. These are. You see that on a stock that's trading at $40 that there's a level at $40 right there. Even you may have 300 open interest, 400 open interest within a dollar range on the 39 and the 41. But then at 35 and 45 for that day, there's 10,000 on both of those levels. Well, those are going to be some hard, and somebody was confident enough to keep selling those options, believing they were going to expire worthless, right?
Wow.
So that's how I feel about it, and then so if I was to think on their end, then if there's a trade that's going to be made between 35 and 45, if that's the money that's coming in and out and in and out, that might be a good level to play for the day. So, maybe stick your buying orders closer to those 35 50s. If you believe that it's going to trade in a range of 35 to 45 and you start trying to nibble at it down there, hope for it to bounce and stay right around that $40 at the end of the day. So let's say the stock was at 38, it closed at 38, opens at 40, immediately sells down to 37, goes up to 40, breaks back down to like 35. That's kind of the attitude. That's the kind of stock that I want to get into, honestly, that it's coming down a little bit, but just not breaking that low of 35 where my mark is, and then hoping that it comes back just to that 40, not trying to get to the 45 or anything like that. And those are just using, random numbers. But when you're looking at these open interests, I like to use those levels as support and resistance, depending on if I'm a long or short,
Yeah, no, I agree. And what I was bringing up about the Snapchat point, and just like there were a lot, I was actually going to bring up Roblox too, and saying like in Coinbase as well, you can throw in that same category. Like there are a lot of metrics out there that are metrics that aren't the company's metrics in terms of, their users or how much money they're making, but you can just look at like trading volume for Coinbase or Roblox and see that a lot of these companies aren't. Maybe I wouldn't say not doing well, might be a stretch, but not doing as well as they were during COVID times. But the market seems to like tolerate it until the company confirms, oh yeah, what you all suspected is true. Crypto trading is really down that much. Roblox downloads are really, because like we can see like how much people are downloading stuff from different platforms and whatnot. So to me, it's like, I don't know. I think Coinbase here is still a short. I wouldn't like it here. But yeah, you got Apple pulled up right now.
Yeah, I saw in the chat that they said Apple's gaining, and I mean it's moved $1 in the last 12 minutes or so. So I mean it's taken up pretty much most of that trading range. I mean, it looks like you're just going to see some consolidation. There's going to be a winner of it. There's going to be a tug of war until we hear what's happening after 2:00. So.
Yeah, and I mean the 2:00. I don't know how important it'll be. It's just the minutes from 2 weeks ago. It's kind of like old news, but yeah.
I feel like that's just what people are waiting. I mean, that's what it's. Maybe the algos are waiting. They're waiting on something to bust out, just some type of news, something to just make some sense of where the money should be moving up or down. Right now, it's kind of a. You've had some weird. What was the one I saw this morning? Dick's. That's always been a fun one. I know you guys kind of talked about that. There were some good, nice winners in there today. Some overnight calls, right? And then it kind of got busted up late, after, this is one of those moves where if you were in this thing before it rips and you can get out, but
yeah, honestly, yeah, we were talking about Dick's earlier because they were trading down and they were trading up, and a lot of the other, we mentioned it earlier, some of the gun stocks are trading higher today. That might be another reason why Dick's and Academy Sports are trading higher, but man, I wouldn't feel good about trading something based on that right now.
We're not all buying a tent. Everyone ain't ready to go camping again this summer.
Yeah, I mean that's like it's not that big of a deal to me, right? That Dick's boomed during COVID because there wasn't a lot to do other than outdoor sports, right? You're gonna go to Dick's, buy a kayak, buy a tent, buy golf equipment. Now, maybe instead of spending that $100 on a new golf club, I'm gonna spend it on a flight ticket because we don't have to worry about COVID anymore. Like it's to me, like I don't think seeing Dick's demand down for certain goods is indicative of the overall or the overall economy and like what consumer sentiment is. But we're gonna see. What I'm hoping, Jesse, will play out is that and this will be dependent too on like if JP Morgan is right about gas prices going to 620, then maybe we are kind of screwed. But what I'm hoping is that when we see that these inflation numbers continue to move down, if gas prices continue to move down, then that will help consumer sentiment and people will continue spending, and hopefully it won't be all on credit card debt, and that maybe this was all just, okay, we just needed to go through a few hard months where things were way more expensive than they should have been, and now things are normalizing again. I think that's completely plausible. I mean, we just went through a 2-year global pandemic like we haven't had in 100 years, so to think there was going to be no economic shakeup or fallout from that is silly. And I'm just hoping we can hopefully weather this storm better than some people think we can.
So, and here's the funny idea is that is that all these people made a bunch of money over the last years. Now they're starting to take some pain, so they might be walking away for a little bit and then enjoying some of those toys they bought.
Yeah, exactly. I mean,
they might be using that golf club and be like on the course 6 days a week, and they're not out shopping for golf clubs because they already bought them. They're not buying.
Right. I mean, Apple sold computers at a faster rate during COVID than ever before. How often do you really need to buy a new MacBook Pro? Every 2 years?
I've had my computer for my laptop for 2 years. It's Samsung, but I've had it for 2 years, and I had my first. My first MacBook Pro I got when I was in like a sophomore in high school, and it lasted me through, I want to say, either my junior year of college or something. Like I had it for like 5-6 years, and then this is my second one ever, and I've had this for a year and a half now, and I'm probably gonna have it for another year before I upgrade. Well, and it's kind of like if you can kind of put that into everything, is that you're basically, I mean, how often do you buy a cell phone? How often do you buy maybe 1 to 2 years, or how often do you buy the camping equipment, a gun? I mean, really, I mean, the whatever their people were buying at these stores, or going out and shopping and buying these boats and jet skis. I mean, there's a lot of people that probably went out and bought a lot of recreational equipment that they're not going to be out buying another one over the next 2 years. If anything, you're going to see a massive flood into the secondary markets, into the Facebook marketplace, the Craigslist, and people selling these items for losses at points now, here in the next few months, next few years anyway. Because I saw, selling, if you look at like certain items, even like you mentioned kayaks, hey guys,
hi,
say, you can get a kayak for $150. Now they're $400 on Facebook Marketplace.
Yeah, $400. And same with bicycles. I mean, we saw there was like a big bicycle shortage during COVID, where like they could not produce enough bikes, and I'd be surprised to see those prices come down, where like you're saying on the secondary market. But let's see if we've got any tickers in the chat.
I drove by the Chrysler Jeep Dodge Ram store, and it's a huge auto mall. They probably had they probably had $50 million in inventory or more. And when I drove by, I took a video of it, and there were about 15 cars on each of the 5 sites. Like it was there was like 0 new cars anywhere.
Wait, just now?
Just the other day, I'm on my way to my brother's house, and it was completely empty. And then last year or a year before, over the last 10 years, that whole entire lot would have, an abundance of rides all over it. So I think that they're just not able to get any inventory at all right now.
That's interesting. I mean, I know at least for used cars.
Also, who's buying a car right now?
We've seen the prices come down, right, with the interest rates and the housing. And that's why actually the Fed right now, there's people thinking there's pressure on the Fed to slow down how quick they're raising interest rates, because if they the housing, the purchases of new homes has slowed down tremendously since the increase in rates. So we shall see.
Jesse Kaylor, always a pleasure, man.
Say bye. She wants to so bad. Say bye, guys. Say hi, Spencer.
Bye.
Hi,
Aaron.
bye.
Hi.
Say make all the money. Stay green.
Make all the money. Make all the money. That's it. Have a good one, man.
All right, let's go spend it, right? See you guys.
Go make the money, spend the money. That's it.
I guess I can't really say have a good weekend on Wednesday. I feel like it's Thursday because
I don't know why. Hey, GameStop is doing that thing it does every 6 months, where it just gets hard to borrow. for some reason. So, GameStop up to 110. Higher. How high did that get just now? 115. Excuse me, 115. That thing it does. If anyone cares, which I doubt you do, but they do report earnings next Wednesday.
Yeah, this isn't really that interesting to me.
Okay.
Well, I mean, it is interesting, like the price movement. I'm saying as far as like a trade, it's like
No.
at this point,
Okay.
you're at a casino. Like
You're right.
You buy it, and it
You're
could
right.
go up another 10%, or you could buy it and it can go down 10%. I don't think there's any way to really gauge, unless someone's like a way better momentum.
Nah,
trader than I am.
I don't care. I don't care either. I just noted the price action and thought that was worth noting. I'm just going through the movers of the day, looking at what's up, what's down. Let's bring out my scanner tool.
Oh my God! Holy cow!
What?
Can you guess Baba's forward PE right now?
Well, I guess Baba's forward PE right now. So it's either. It's probably really. I'm guessing it's really low. Is it low?
Yeah.
Okay. Is it like 15?
1.5.
No, it is not. It's not 1.5. Forward PE can do some funky. It can sometimes be weird, wonky like that. There's no way it's 1.5. I refuse to believe that. There must be some weird adjustment going on there. Lord Byron has been buying GME under 100. Okay, that's been working for you. Yeah, there ain't no way though. Here, let's see what the pro says. There's no way. There's no way that's right though. Alibaba forward PE. We say Benzinga Pro says 9.4. That's more like it. There ain't no way forward PE is 1.5. 9.4 is still cheap though, but do you really want to buy China right now? And you want to invest in China? I don't think I want to do that ever again. Why would I? Why would you when they just showed what they can do to their own businesses? So anyway, they report tomorrow morning. But what else is out there? We got like 2 minutes left in the show today, and I'm all out of things to talk about. How's our friend Valvoline doing? VVV. Short-lived spike. It'll be back at $30 by the close. I'm saying. Hot take. What's the chat going on about? What the hell is wrong with Google? Ajax. Well, nothing's wrong with the company per se, but here's what I would caution you, right? Remember that stocks don't move in vacuums, right? Stocks move because because of relationships, right? That's one of the main reasons that stocks move. Relationships. Even if there's nothing new with regards to Google's business, if one of their peers is moving up or moving down, Google will trade with it. So what happened yesterday, right? Because that sticks out like a sore thumb, right? Yesterday, Monday after the close. What happened Monday after the close? Snapchat came out, and they said that the macro environment was deteriorating. I can't say that word. What does that translate to? The online advertising environment is because that's code. That's what the code is, right? Because think about how Snapchat makes money, advertising, right? So Snapchat says the macro environment is deteriorating. What that really is code for is the online advertising market is deteriorating. All right, let's go think. What are all the companies that make money off of ads on the internet? Google is the big one. There are two big ones, right? Google
and Facebook.
And Facebook. Google and Facebook account for like 85% of all advertising spent on the internet. Okay, it's 85% of advertising dollars on the internet are spent on one of those two platforms, Google or Facebook. Okay, look at Facebook yesterday or Monday night. Okay, so that's why Google moved, and that's why I moved down again yesterday morning. Okay, It's they tanked every single stock whose business model is online ads. Is that fair? Probably not. In my personal take, and we've discussed this ad nauseum by now, is I think the Snapchat warning was more of a TikTok-induced thing than anything else. Snapchat as a business provides us very little visibility into the macro environment as a whole. But that's why Google has been hit here. So if nothing is wrong with Google.
I'm so long.
But the market is extrapolating that Snapchat's weakness will also show up in Google's business.
Yeah, but
down the line.
Snapchat has TikTok taking its market share. Who's taking Google's market share?
Bing.
DuckDuckGo.
Bing.
Ask Jeeves.
Ask Jeeves was a great search engine back in the
Yahoo.
day. Rest in peace. Actually, is Ask Jeeves still? It's now Ask.com. ASK. Ask.com. I think it's still around. Yes. Ask.com
Has
is
the same logo still. It just
still
doesn't have-
around.
They just dropped the Jeeves. I wonder who Jeeves was. But I'm long.
Wait, you know who Jeeves was? You ever seen that? You ever read? Guys, help me out here. You ever read? What's his name? The author P.G. Wodehouse.
Nope.
P.G. Wodehouse was this British author, and he wrote all these really good like books and short stories. And Jeeves was the butler, and they made a show about it, starring Hugh Laurie.
Okay.
Yeah. Anyway.
Hugh Laurie's the guy from House, right?
Yeah, but before that he was Jeeves. So Hugh Laurie is Jeeves. Anyway, it's 2:00. The minutes are out. They just changed our lives. Whatever was said.
I have a feeling you're being facetious.
I am.
Okay.
Is the spy pumping? Spy bumping?
Yeah,
a little bit. Just a little bit. Our lives are changed forever by what was said in these 5 minutes. What was actually said, I have no idea. But we're done. The roadmap is going live right now. Do us a solid before you go. Hit that thumbs up button. We'd appreciate that. And we're off until tomorrow. We're on a 21 and a half hour break. See you guys later.